All right, everything looking good. We are live. Let's go ahead and get this stream started. And boy, is it going to be a fun one today. Welcome back to the channel, Crypto Trend Trader, with our Friday morning market wrap up. It is 11 a.m. Eastern Standard Time on September 16th, 2022. And as always, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, if somebody could let me know in the chat everything is coming through loud and clear, I would greatly appreciate it. In the meantime, we'll go ahead and get everything rolling. So obviously, saw some nice volatility as of late. Let's go ahead and take a look, see if we can get to the bottom of it here. So for the TNX, we had a very, very strong close yesterday. Rallied into the close and basically closed at the highs. This is our cycle high, which we are essentially threatening, banging our head up against right now, however you want to look at it. Our high was 3.483, and today's daily candle wicked up to 3.53. Nope, 3.49. 3.49. So 3.483 and 3.49. So we did actually put in a higher high technically, officially today. So of this entire cycle, anyone that was calling for the tops in yields is obviously brain dead retard, because we just put in a new high. So unless they're calling for it today and then just happens today is going to be the top, obviously they have zero credibility. So, and as a matter of fact, anyone that said that, yields would never go back to this level since 2011. So if it was 2011 and somebody was like, hey, it's 2011 and I'm going to make a bold prediction into the future that at no point in time ever will yields go back above 3.5%. Well, they're fucking wrong. So, but they were right for like 10 years. So, are they right or are they wrong? Depends. But the fact of the matter is, this is still a powerful uptrend, still aggressively moving to the upside. And while it has shown signs, of slowing down at times, you could have said here, it's looking kind of toppy right now, or it's slowing down. And that's fine, as long as you said, okay, it's looking kind of bottomy right now. It looks like it's about to pick back up. But the people that say this is the top and then stick with it and then stick with it and then stick with it as we go higher and then keep trying to call it the top, those are the people you have to look out for. Because those are the people that will lose all of their money and they will lose all of your money as well. So if you ever hear somebody, who's wrong about a prediction or a, bit of technical analysis or whatever, don't necessarily hold it against them. Like now they have zero credibility because they were wrong about something. Hold them responsible when they're wrong and they don't admit it, because that's what really matters. Because the fact of the matter is, nobody's going to be right all the time. And the same, it works on extremes like everything does too. People that flip-flop all the time are horrible to listen to or have in your life. And people that won't, just absolutely refuse to admit when they're wrong, also equally bad to have in your life, especially when it comes to like finance and whatnot. So as far as I'm concerned right here, as far as everyone is concerned right here, we are literally at the highs. We literally just put in a new high. Is it possible we double top here? Sure, but I just don't see it. There's no reason to assume this is just going to be the top. So next on U.S. oil. So oil just continuing to do the same thing. We're still inside of basically this downward channel trending situation going on here. So we're not technically in the little channel how I have it drawn on this specific chart, but we're still putting in a series of lower highs and lower lows, which is what's represented by this. And then we have the other channel right here. We continue to talk about the potential of a powerful move in oil back up towards the highs for another lower high. But the truth is, the longer we hang out down here, the worse it is. I mean, there's a cluster of support right here, but eventually if we spend too much time at it, we're going to drop down into the 70s. So you guys know that my macro target for oil is much, much higher. But in the meantime, we could easily see something like, the 60s or so. But we'll see. Obviously, we have some targets in the 70s in the meantime. So next we have the Dow Jones. So this was a big move today, obviously. what we expected. So the Dow has been giving us pretty clear signals and very little kind of like indecision. It's been very accurate the entire way. So we've been really trusting the Dow, S&P as well, much less the NASDAQ and the Russell, as they have consistently been wrong about what was about to take place or been giving like false signals. So here on the Dow, we had basically a push down here where we developed some bullish divergence. We talked about it in advance as we were developing it. We talked about this point right here. We talked about this point right here. And after 2 green histograms in a row, we consider that to be potential swing. And then obviously we have a low here and a higher low here. So, and the reason I'm bringing this up is we were talking about it in the group, and it's important that people know, because this is a special, I don't want to say it's a trick or a tip or whatever. It's just something that everyone should know and learn, because it's going to help you out with divergence into the future. So we have a clear low right here. We have another clear low right here, assuming we didn't know this was about to take place. So here we get that 3rd green histogram. We get the buy signal. We have a higher low on my bad. We have a higher low on the MACD, TDMACD, but on the histogram, or on the stochastics rather, we have that lower low. So here's our low, then here's our lower low. So when we look at the low right here and the higher low right here, we can see clear bullish divergence between those points. So that would tell us that we're likely to get a powerful move to the upside. Now we saw that move then play out very shortly afterwards. We have 2 green histograms in a row. That's our minimum, on the daily, to say, okay, that's considered to be our swing, because we have 2 green histograms in a row. Now we're starting to build a trend back to the upside. So we have a bunch of red histograms, then we get 2 green ones. So we say, okay, it's valid to use that as, a potential divergence point, etc. So then we get an aggressive move back to the upside. And that aggressive move, I mean, it's no joke. Let's be real. If we go from the high to the low, that move back to the upside is over a 38% move, almost 50% move. So it's a pretty aggressive move. So after that takes place, the divergence has basically already played out now. So we had the divergence. We got an aggressive move off the divergence, counter trend. So we had bullish divergence in a bear trend. So we get a bullish pop to the upside. And then, arguably, once either the Stokes take out the low from that previous low, or the histogram or whatever we're using for divergence, or the price action takes out that low, divergence is no longer in play, because we've already resolved it. It already exploded to the upside, and now we're coming back down. So there's no more divergence to pay attention to. So once that happens, the divergence has played out. Now, there's lots of different ways you can determine whether or not the divergence has played out. There's lots of ways you can say, well, once 2 histograms, or once this, that, and the other. Nothing is 100% all the time. But the most important thing is that you have something in the books where you're going to write down and say, okay, the divergence has played out. In my opinion, we see clear divergence. We get multiple green histograms in a row. That's how I do it. 1 and then 2. And then we get the pop to the upside, 30 to almost 50% move to the upside. So that looks like bullish divergence that already played out. I mean, I don't expect that bullish divergence to like reverse the trend and now we just go to new highs. That's not what it's going to do. It's basically just saying, hey, there's a divergence between what's happening in price action and the indicator oscillators. So we're going to need to see some kind of powerful move to reset that divergence, which happens. We then, move back to the upside, and then at that point in time, the divergence is gone. So now the most important thing we're paying attention to, have been paying attention to, was this low right here. So obviously, there's multiple lows on this chart that really matter right now. Obviously, the cycle low, the lowest low we've put in this whole entire trend, that's very, very important. And then the other important one was when we put in another swing low right here. And the reason that's important is because now we have a low, then a high, then a higher low, and then we're looking to put in a higher high. Unfortunately, when we come up right here and we put in this lower high right here, now we have a high, then we have a low, then we have a lower high. So what we're expecting is a lower low. If we don't put in that lower low, we can then continue to look for the higher high. But once we do put in that lower low, which we did yesterday with this close, it tells us we're going to see continuation of downside, because the area that we were hoping would hold this support, we try to move to the upside, the counter trend rally failed. And then once we take out that low, it tells us, okay, we got to look back and see where are we going now. You could look at this low. Not very important to me. This one is the one that matters. So as people were talking about, hey, is it time to be bullish? Is it time to be bearish? etc. J Off says only 2 people watching, bottom is in. That's the funniest shit ever, bro. The full on like counter trend / like sentiment argument. I said that in the channel, bro. I don't know, or in the group. I don't remember exactly when it was, but it was right around the actual bottom. I literally posted up. I was like, only 4 people active in the group right now. I was like, bottom's in. Everyone's lost interest, and sure as shit, it really was too. That's funny. But anyway, the most important thing now we're watching is, obviously, are we going to take out this low right here? And again, what I've been discussing in the group and pointing out specifically is how many very, very important stocks in this market that have led the market to the upside and have been holding up extremely well are already putting in new lows. Matter of fact, there's no structure to this stream. We can do whatever the fuck we want. So let's jump over here and look at some of those. So Apple, obviously, holding up pretty strong overall, nowhere near the lows. So, okay, nothing to worry about, right? Tesla, another big one, very, very culty, obviously well off the lows, nothing to worry about. So if we just stop there, everything's fine, right? Because Apple and Tesla are doing great. What about these other big stock names that are like big portions of the S&P or the NASDAQ or something like that? Okay, let's look at Microsofty, okay? Microsoft, we're at the lows. Huh, that's weird. So we're already at the lows. Google, oh no, we're putting in new lows. Google's important, right? I mean, Nvidia, that was a really important one on the way up. Oh no, look, new lows. That's strange. What about Meta? Meta's important, right? Oh look, new lows. So literally all the, 4 of the last 6 that we just looked at, Apple and Tesla look okay. Microsoft, Google, and you have, you can look at Google multiple ways. You have your A shares and your B shares. I just add them together and just look at their weighting overall in the indexes. But, you can count that as 2 or 1, however you want to do it. But, I mean, a lot of these very, very important stocks are currently putting in new cycle lows. So what does that tell us? Well, when we look at the Dow Jones, it's really not that surprising. I mean, we're barely off of the lows. So, yeah, we're a couple percentage away, like 2% off the lows. So it's not crazy to think that half the stocks are already putting in new lows and half of them are not, or a couple of them are not, or whatever. But really, what is that telling us? Again, it goes back to all the secrets that we use in the market, things like breadth and whatnot. So if you have a certain amount of money and a certain amount of assets, and everybody has to spend all that money on assets, it's going to pump up the prices to the maximum price that they can get to. If you start to remove some of the money from the system, it's less likely or less viable that all of those assets go to the same highs again. So likely if say everybody gets $10 to spend and you got 10 people, so there's 100 total dollars floating around, and there's only so many pieces of whatever it is, candy or beef jerky or whatever it is that people want to buy. If everybody is just deciding, oh, I like beef jerky the best, so I'm willing to bid the most for beef jerky because that's what I want. And then somebody else is like, oh, I really like cake, so I'm willing to bid a bunch on this cake right here. And then maybe I'll throw a couple bucks at some beef jerky, et cetera, et cetera. So everybody's bidding on the price of stuff. If you start taking away people's buying power, so instead of everybody having $10 to spend, now everybody only has $5 to spend, and then they still bid on those same assets, the beef jerky and the cake and the, vegetables. We'll throw some Brussels sprouts in there, whatever it is. So there's a bunch of different things they could bid on, but everybody has less money to bid with now. So certain items, say everybody really likes beef jerky might still get bid up to, $10. Somebody's willing to pay all their money for it or whatever. Or 2 people are going to work together and use their $5 each, whatever. So the one price of something can get bid up extremely high, but that's reflected in the price of all the other stuff. Maybe nobody has a sweet tooth, so there's $1 gets bid on the cupcake. Or cake or whatever, or $1 gets bid on the Brussels sprouts. So somebody's like, well, I'm gonna need some food. I'll buy this trash food over here, but I really don't want it. I'm gonna put my money, like resources, to work somewhere else. That's like the market on a super small scale. As there's less liquidity in the market, there's less money in the market because interest rates are higher, therefore the price of money goes up, therefore there's less of it because there's less demand, because the price goes up, demand goes down. We know that we're unable to move all of the prices back to that level. So peak, maximum, just ridiculous prices was, probably the end of 2021, beginning of 2022, around, when crypto was topping, around when the stock market was topping, etc. Some of the stuff actually peaked months before that. Like a lot of tech stuff was already peaking. Crypto was technically, depending when you call the peak, etc. So somewhere around that time was like maximum just ridiculousness in the markets. So the likelihood of us getting back to that level is extremely unlikely. But something like a Tesla or an Apple can still hold up really nicely. Something like the Dow Jones can hold up okay. But then if we look at a bunch of the other stocks, we look at Apple or Tesla, we're looking at some of the biggest stocks with the best charts in existence. When we look at, something like Nvidia or some of the other ones, even Google or whatever, we're looking at big stocks with not necessarily good charts. But if we look at the really shitty stocks, like just the complete trash that has just totally melted down, lost 90-something% of its value, or we look at some of the cryptos or whatever, a lot of that value has been destroyed and likely never comes back. That's the Brussels sprouts. People are still willing to bid $1 on it, but they really don't give a shit about it. There's still some opportunity. There's some nutrients there, but that's not what they want. And then, Tesla and Apple, they're like our beef jerky and our cupcake. Everybody likes beef jerky and cupcakes, of course. And then there's a bunch of shit in the middle that might have been getting bids of, 6, 7, 10 of our dollars on it. But now it's getting bids of 2, 3, 4. So that's kind of where like the breadth of the market comes in. It's okay for something to be doing really well, and some things are going to be doing really shitty, but there's a lot of stuff in the middle that's not going to be doing nearly as good as it was the most loved or the most hated. And that's really what it comes down to. So when I look at something like the Dow Jones, it gives me an accurate idea of what's going on. It's the top 30 biggest companies, in the United States. So that's an important gauge of what's actually happening in the space. So for the Dow, we know the key areas to watch. We're watching that next low. What happens in the meantime? Probably the same thing. We just continue to just slow grind down. But as far as I'm concerned, when we look at the longer time frames, it's pretty clear what the fuck is happening right now. Like anybody who's still denying it right now, full on either delusional or, we'll give them benefit of the doubt. Maybe they're an intelligent person and fully in touch with reality. They're just high on drugs right now. They're not actually like delusional, like, oh man, you might have like some mental health issues or something and should see a doctor. No, they're just high on drugs, which that's okay. That's fine. If you want to, be that person, by all means, but just understand that your credibility is garbage. So, when we look at this is a clear rejection of the weekly. As clear as it gets. And look at this, what's happening right now. Is there any arguing that we're going down here to sweep the lows and revisit the lows? Of course not. We're definitely going down there. It's obvious as fuck. Anybody that looks at this candle on the weekly and says, I don't know, could go either way. Come on. This is a clear downtrend. Lower highs, lower lows. We're headed back down to sweep the lows. What have we been saying this entire time? Including when we were down here at the bottoms, I was expecting a push down slightly lower, and it didn't happen. It wasn't happening. And then we're able to identify, look, everything looks bottomy here. We were able to capitalize on this run. We were able to sell into the 200s and capitalize on the move back to the downside. And now where we headed to? Our target, to retest the 200 simple, sweep the lows, a double bottom potentially, or, just one more stop before the next big drop. We don't know which one's going to happen, but it's pretty clear that it's happening now in real time. So it's always nice when we can get ahead of these markets and take advantage of them. Obviously, at this point in time, anybody that looks at this chart on a monthly time frame, well, most people obviously not using these moving averages, but anybody that looks at this chart right here sees the 8 and 21 are about to cross the downside, a bearish monthly cross, and everyone knows, we've talked about it 100 times, that this was our last bearish cross right before the capitulation for Rona. This was our last bearish cross, 2008. This was our last bearish cross, 2000. So if we get the bearish cross, which we look very likely to, now there's still 2 weeks left in this month, 14, 15 days, we know what follows. The potential retest of a 200 exponential or simple. The potential of another 33 to 50% downside. Does it have to happen? No. But if you ask me anywhere on this thing right here and you were like, hey, are there any key areas that you could identify like in advance or like in real time where you would be like, hey, I'm not going to carry insurance on my portfolio all the time because it's not really that much risk. So instead, I'm going to occasionally purchase some downside protection or some portfolio insurance, but I need some time where I don't have to carry it all the time because it really cuts into my gains. If I waste 2% covering my ass from a big downturn and I average, 10% per year, then it takes my profits from 10% per year down to, 8% per year, cuts into my profits substantially, making like 20% less in profits, protecting myself from downside. So what can I do that would trigger me to all of a sudden want to purchase downside protection? If only there was some sort of way, a cross of moving averages, or like, a color that just randomly popped up on the chart that we could use. Well, I mean, I guess we could use the 821 cross. That seems like a good thing. When the 821 cross happens on the monthly, we usually melt down afterwards, sometimes for a really long time, and most of the time for like, 25 to 50%. How often does it happen though? Because I don't want to get that signal like every day and be buying downside protection. It defeats the point. Well, it happens once right here in 2001, happens once right here in 2008, and it happens once right here in 2020, and it's about to happen now. So we have 4 times in 20 something years. Well, that's not bad. Once every 5 years, it warns me, hey, maybe cover your ass for a bit. That's pretty good. That's all this is. That's all this strategy is on the monthly. I'm not saying that we're going to go into some bearish monthly downtrend, break down below the 200s. They're going to roll over flat, and then the Dow Jones is going to go back to, the same levels it was in the 1900s. I'm not saying that. All I'm saying is the probability of an extremely high probability of a big sell-off flashing right now. So that's what we're protecting against. That's why it's so damn important to be looking at the longer term time frames, even when we're trading the shorter term time frames. So everything to me, bearish. I mean, it's bearish stock market. We talked about some potential in crypto. We'll talk about that again. But even at this point in time, it's tough to stay bullish on crypto. I actually almost closed my position a couple times because it's just, ugh. So SPY, exactly the same thing. We lost that low. Closed slightly below it yesterday or at it. Either way, it was weakness. So now we're threatening the cycle low. So that's what I expect. Come down here, retest the cycle low. We know that this chart is exactly the same as the Dow Jones. Now here, if we go to the Qs broke down right here, NASDAQ to a new low. So, again, we're threatening the lows, probably headed down there in the very near future. And then if we go over to the Russell, we'll see the Russell was still holding up pretty strong. And then when it gapped down today, it gapped down to that support level. So it's still acting as if this is going to hold up as support. Well, I mean, newsflash, obviously, if the SPY and the Dow Jones and the NASDAQ can't hold support, the bottom 2,000 companies out of the top 3,000 companies are not going to be, the glorious winners that somehow outperform. Now, why is the Russell holding up then? Why does the Russell actually look okay if it's actually not strong? Well, I'm going to show you in a second. What's going on, Milligan? Good to see you, brother. Big D says, hey, all, what's happening? What's up, Big D? Good to see you. All right, so here is the Russell, and I just have it compared to the Dow Jones, the NASDAQ, and the SPY. So the Russell is the actual candles. The Dow Jones is, well, you can see over here. Dow is orange, NASDAQ is blue, and SPY is yellow. So let's just look at a couple key points right here, because here's the argument with the Russell, why people like the Russell and why the Russell would be holding up better than everything else right now, theoretically. The idea is that growth is going to lead us out of this economic turmoil. So, the markets are crappy, the economy's crappy, so people buy the Russell because it's underperformed recently, so then they're going to buy growth, and then growth is going to lead us out of this recession or whatever you want to call it. And that way you end up outperforming the market based on that. So let's actually look at the difference. And so what we were looking at here is everything is just based on percentages. So we can look at, what would be the percentage. So let's just say, hypothetically, that you were just the worst investor ever in all of existence, okay? Or maybe you're just like a really good investor, but you just have the worst luck. Regardless, same thing as far as I'm concerned. You're the worst investor possible. You literally bought the absolute top in February of 2020, okay? You bought the absolute top. You ate the entire downside, and then you just hodled the whole time like a champion. So what happens? Okay, so obviously you bought the top right here. So that's what's being factored in as your entry price. And then regardless of the actual drawdown, we're not going to pay attention to that, the percentage drawdown, whatever. We're just going to look at right now. If you were still hodling, where would you be? Well, I mean, you're up 9% on the Russell from that high. So you're still okay. You're up 5%, 4.5% on the SPY. No, I'm sorry, on the Dow Jones. You're up roughly 18% on the SPY. You're up roughly 16% on the NASDAQ. So, a couple percent difference either way. Well, what if you were the best investor ever and you bought the absolute bottom? How did you do that? So we just move the entry price to the absolute bottom right here, and then you look at it and you say, okay, give or take, you're up 73% at the best area, or you're up 59% at the worst. So again, give or take a couple percent, they pretty much traded the same. Now, there was times when the Russell went absolutely parabolic and you could have got out of the Russell, put it into something like the NASDAQ, and then overperformed. At the absolute peak, the NASDAQ and the Russell were basically the same if you bought the absolute low, and obviously the Dow lagged behind some, so we can look at different points in time and say, okay, if you would have bought this, how much different would it have been? How much better would it have performed? Did it lead us out of the recession? I mean, I would say, yeah. Like if this was, if we count the Rona dump as a self-inflicted recession, and then you look at what the Russell did, everything was trading about the same here. The NASDAQ was like clearly outperforming. Tech was clearly outperforming. Makes sense. A lot of growth in there, right? And then all of a sudden, the Russell was hanging out with the SPY, with the Dow Jones, and then it just bursts to the upside right here. It catches up with the NASDAQ, and then it just soars above everything. And, at one point in time, there was a pretty strong time in here where you could have sold the Russell up 122%. At the absolute peak, it was up 133%. So there's definitely an argument to be made. And, it's a fact. Obviously, we just shown you a couple small examples, but, it's a fact that coming out of hard times, that often like small cap growth will lead us out and outperform. So that is the reason, and obviously over the last, a year plus now or whatever, I've been pretty hard on the Russell. I mean, deservingly, it's obviously performed like shit. And you guys know that, based on how good or bad a stock chart looks is how mean I am to the stock. So, in this case, we can see pretty clearly that there are times when it's better to have something like the Russell. There's times when it's better to have something like tech. But overall, things perform on a long enough time frame pretty similar. The major indexes. Now, you can pick random times and say, well, what if we bought right here? And then you can see bigger divergences where, tech does really well, or, there's obviously a bunch of different times where you can look at it and you can change this and make it basically like tell the story that you want it to tell. But regardless of all that, you can see that essentially sometimes one performs better than the other. Overall, we tend to see a little bit more volatility in the NASDAQ and the Russell. And we tend to see them typically do better coming out of like a recessionary period or a slowdown or something like that. So is there going to be a time when the Russell is rightfully strong and you want to buy and invest in whatever? Sure. And that's exactly why the Russell is actually holding up better right now. And that's exactly why the NASDAQ has been holding up better as well. Because people are saying to themselves, they're convincing themselves, they're selling a narrative on TV or on their YouTube channel or whatever, that the bottom is in. And so everybody knows once the bottom is in that, coming out of a recession or coming out of an economic slowdown or whatever, that the best performers are typically growth. And that small cap growth is typically, where the biggest gains are made at. So that is why the Russell and NASDAQ have looked particularly good lately, or better, or stronger, or holding up better, etc. It's because people are still betting on the bottom being in. But at what point in time do you say, okay, actually, like if the S&P and the Dow Jones are like threatening their lows and putting in new lows, and a lot of like big name important stocks are putting in new lows, probably the bottom is not in. That's for everybody to decide. You have to make your own decision on that one. But in my opinion, I don't see any signs that the bottom is in. Anyone that's arguing that the bottom is in, where's the argument? Where's the actual like proof? Where's the data that says this is why the bottom is in? Because that's not what I hear. I hear, oh, everybody's bearish, so the bottom is in. Or people are giving up, so the bottom is in. Or everybody that's going to sell has sold, so the bottom is in. If you have any technicals, let me know. All right, so SMH threatening the lows right here. Obviously, semiconductors looking extremely weak. XLE starting to roll over right here. We talked about some key levels, and there are two hypothetical scenarios that could be playing out. One is, an inverted head and shoulders. We're in the middle of that playing out, and we're going to new highs. Two is that we actually did an internal retracement of the 786 or 886, depending on which level we're looking at, and that actually this is already topped. It's just a lower high, and now we're getting ready to put in new lows. That's obviously my theory for this macro, like 5 waves complete, and then we're actually in the middle of a correction. So we'll see what happens. It's tough to tell right now. Obviously, we see some weakness in oil. We see some strength in nat gas. We see, uranium and nuclear stocks have been doing some stuff. Green energy is kind of popping off. In my opinion, though, we're likely headed back down here to the lows and probably new lows. Now, we'll know when the 821 crosses on the daily, the bear cross happens. We'll know if we lose the 200 exponential and simple, key levels. We'll know if we take out the previous low. Lots of key levels to pay attention to. Breaking below this area right now, though, is basically losing a key support. And then at that point in time, it's pretty obvious. We'll likely be threatening the lows. And then, we can start looking at our macro levels and our targets and everything. You guys know somewhere between like 50 and 60 is where we're looking to swoop back in on this energy play. All right, now utility. So utility's been extremely strong. Again, looking a lot like a little double top right here. We do have, and here's the differences, right? So we put in a new high right here. That looks really bullish. But then what happens right afterwards? We basically gap down and then see consistent selling. Now, that doesn't have to be a top. It's not necessarily over for sure. But then we look for confluence. Like what else is telling us, hey, this is probably the fucking top. Well, we have a high right here. Then we have a higher high right here. When we look at our indicator oscillators, we have a high right here. Then we have a clearly lower high right here. Again, here we have a high. Here we have a much lower high. And this is one of the most reliable rejection signals. Talk about it all the time, guys. I'm sure you are tired of hearing it. But when we break down below the slope line and the slope line stays blue, or even if it flips red and then flips back blue before we get to it, when we back test it, if we get rejected, it's one of, if not the most reliable rejections we can get. And of course, in this case, it's lining up perfectly with bearish divergence and just a slightly higher high. So what happens right after the bearish divergence starts to play out? We come back down and retest support. So we need this area to hold for support. If we break down again, we're likely coming back down here to fill that gap. I think that's where we're headed. We're probably headed to like $70. So we'll see what happens, but that's my target. Bearish divergence, literally like playing out as we speak. And again, we pay attention like, okay, how do we know when the bearish divergence is done? How do we know when it's finished? Well, we can look at the histograms rolling back over. We can look at the slope. We can look at the, 821 crosses. We can look at key support levels, etc. But right now, it looks to me like bearish divergence clearly has printed. Once we have the 2 red histograms, we have one attempt to push back up. We cannot flip that histogram back green. And then again, start selling off. So utilities right now looking like it's getting ready to continue selling off. And again, this is our safety play. We don't expect it to necessarily like outperform phenomenally well. Like you're always going to do better betting on tech than utilities if both of them are going up. But when they're going down, you're better off betting on utilities because even if they both go down, tech's going to go down 95%. Utilities going to go down 20%. So XLP, consumer staples. Again, this is a key safety sector, in my opinion. And you guys know we were talking about it in advance. This looked a lot to me like just a back test for a lower high. And obviously, these are the key levels we were looking out for. Our key resistances. When we get back up to those levels, we basically punch through them and then just put in another lower high. We have talked about a bunch of different patterns this could be developing, etc. But we know the key level to stay above was the macro green 236. And the top of this channel right here, that yellow support right here. And we broke down below that. So we have another very, very strong support. Obviously acted as support all through here. The bottom of this orange channel. So that's likely where we're headed. And what is that? Just a revisit of the lows. So consumer staples, revisiting the lows, looks very probable at this point in time. Now it's only like $68 from where we're at right now, but we know after that, I mean, realistically, let's be real. What's probably going to happen? We come down here, we visit the lows, it gets bought up, we back test at 236, and then eventually we kind of chop sideways, and then eventually we go to the 382. And if we go to the 382, we might as well just go to the pre-Rona dump right here. So this is basically our target right now on XLP, is just between the macro 382, which some things have already gotten to, some haven't, and the pre-Rona dump. But again, you know, probably come down here, probably bounce back up, and then eventually make our way down there. All right, now let's talk about sweet transportation. Obviously, this is going to look a little bit dumpy, thanks to, you know, the trash bag company that ships goods around the United States. I mean, do they actually even ship anything? I don't even know. I buy a lot of packages online, and I can't even remember the last time anything actually came FedEx. I mean, it's either UPS or USPS, like 99%. I mean, is FedEx even still like a business? I don't think they even exist anymore. So I'm surprised they haven't just gone straight to zero. But we'll talk about that next. So anyway, transportation, obviously one of the canaries in the coal mine, one of the four horsemen of the apocalypse. I've talked about it a gazillion times in advance about transportation sector looking like it was topping out. And, you know, basically how it consistently builds ascending channels all through the bull runs. And then when it breaks down from then, it usually either double tops or puts in a divergence new high and then sells off. So then we were inside this descending broadening wedge, took advantage of a nice little scalp to the upside, 15%, took profits at the 200 exponential. And then since then it has melted down. And of course it melted down all the way back to the entry price. So if you entered this trade and didn't take profits, you went from 15% in the green to 15% in the red, or, you know, black, depending on how you're looking at it, instead of green. But regardless, you know, we're basically down here threatening the lows again. In this case, we've already come down to the 382 of the green fib, which is the Rona dump. We also have the blue fib in here, which is like the macro potential high. Regardless, if we come down to that level again, you know, and eventually it breaks or whatever, we likely see the 0.5 target next, which is $60 on this. In my opinion, looks pretty bad. We'll see how it plays out. We confirm into a bear market, breakdown, reversion to the mean, rejection, back to the lows, sweep the lows, likely go to new lows. We'll see what happens, but it obviously does not look good. When we look at the longer term time frames, you know, what are we doing right now? Well, we're retesting the 200 exponential and simple. The 200 exponential already has a red slope. And if we were to just close right now, 4 hours ahead of time, they were just like, oh, we're closing early, guys. Wrapping it up for today. Long weekend ahead. We would be below the 200 simple. Now, we closed below the 200 simple right here, and then we reclaimed it. But we put in a lower high. So can we close below it again and then reclaim it again? Maybe. I mean, we had a chance for a bull cross on 821. It got rejected. And now we have this big ugly red candle. So probably we're just going to head down to the new lows here in the near future. If not today, soon. Probably next week, couple weeks. Momentum rolling over. I mean, it doesn't look good. We know that. We know that. 821 have already crossed the downside. Just super disgusting and bearish. And obviously, you know, why? Well, why does transportation matter? How come it's one of the four horsemen? Well, transportation, much like food and energy, has its hands in everything. Like, if you want to move goods throughout an economy, you need to transport those goods. If you want to move people or productivity within, you know, economy or geographically, you have to be able to transport those people. So if transportation is not doing well, it tells us overall probably things are not great in the economy. Because when it's doing really well, there's a bunch of movement. As they're not doing as well, there's less movement. You know, and you can look at that and look at the energy trade, and it's very clear. You know, the idea of supply and demand in energy, take away all brain dead, retard governments, take away all stupid fucking fucks. Like, for instance, let's use a really good example of just how fucking stupid human beings that are in charge could possibly be. Let's look at, who should we choose? How about the UK? Let's choose the UK. Okay, so let's say, for instance, the UK is run by complete moron, retard, fucking idiots. Okay, so reality. And then let's say some of those complete moron, retard idiots step down, and then other complete moron, retard idiots take their place. Okay, so reality. So if you have an issue with energy, and this is obviously a price cap discussion. If you have an issue with energy, and the problem is there's just too much demand and not enough supply, you can go out of your way to create more supply. Well, we're not going to do that because we're too woke. We don't need energy for anything. It's all bad. It's terrible. It pollutes. It's bad for the earth. So that's not even a possibility. There's no way we're going to create more energy. Maybe we'll build like some windmills and some solar panels, and we'll have like some government employees run around with bottles and try to catch farts to stop global warming. And so obviously a bunch of retards trying to do retard stuff. Okay, so that's not going to work. We already know that. So what's the other choice? Well, you can curb demand. So if there's a set amount of supply or fixed supply and there's too much demand, prices are going to go through the roof. So if you take the demand down to an equilibrium point, prices will stop going up and potentially even go down. So what's the best way to curb demand? Well, you raise because of the direct relationship between supply, demand, and prices. So now let's say you're moron brain deads, like the people in charge, just in general, but we're focusing on the UK. So these morons that are brain dead are going to put a price cap on energy. So they're going to say, hey, you can only charge people so much, or like, a person can only have to pay so much in a year for energy. So they cap it at like whatever, 2,500 pounds or 3,000 pounds or something like that. So once you've paid this $2,500 or $3,000, converted over whatever for simplicity. Once you've paid this set amount in that year, you don't have to pay anymore. The government is going to subsidize any further energy you need. So everybody just go ahead, use energy, okay, knowing that no matter what, no matter how much energy you use or how high the prices go, just know for sure that $3,000 is the most you're going to have to pay. So what does that incentivize you to do? Does it incentivize you to try to cut corners on when you're running your heat in the winter to save money? No, not at all. Matter of fact, it does the opposite. Well, I know I'm going to reach $3,000 or pounds or whatever by the end of the year. I know I'm going to spend that much money on energy. So I might as well just keep my heat turned up, super comfortable all the time, even when I'm not home, because I'm already going to reach that 3,000. So if the potential was, hey, I'm going to cut back to keep my bill as low as possible, or the opposite is, hey, we're going to cap your bill so that you can't get charged a bunch, everybody's just going to use more. Nobody's going to cut back. No one's going to conserve. So it's just a full example of why price caps don't work. And then on top of that, you end up with a situation like what happened in China. I mean, this shit is happening in real time, and yet the people in charge are continuing to make the same mistakes. What happened with China with all these rolling blackouts? Does anybody remember that? Like 6 months or a year ago, there was constantly rolling blackouts in China. There was like whole, massive portions of their economy, of their country, where there was no power for hours and days at a time. Do we remember any of that? And it was all coal related. Well, why was that actually happening? No one ever talks about why it was happening. The reason it was happening is because they put price caps on coal. So they basically told all the companies that are like processing the coal, hey, you're only allowed to charge this much for coal. And they're like, okay, well, we're just not going to sell any more coal then because we're losing money. And they're like, okay, well, you have to sell the same amount of coal as you were selling before. Okay, so we'll just do that then. We'll do the bare minimum that we're required by law to do. So then you end up with a bunch less coal because there's not a profit. There's no incentive for people to make coal if they're not able to make money off of it. So then they just do the bare minimum. So then there's not enough coal. So then coal prices go up, but there's price caps, so they can't go up. So production just goes down. I mean, it's basic economics. And yet, here we are. So good luck, UK, in the future. You're obviously run by brain dead retards. But, so is everywhere else. So it's not about who the worst leader is. It's not about who the worst country is. It's not about any of that. It's just about how shitty is everybody compared to all the other shittiness. So if there was like a clear, just not shitty leadership somewhere in the world, we would all know about it because they would just be like doing phenomenally well. But instead, it's just a bunch of different levels of just how shitty leadership is. And it's just relation to how shitty they are. So we obviously know that Europe in general is extremely woke. They're anti-energy, they're anti-humanity, and they're for, wokeness, equality of outcomes, whatever, all that. Sure, okay, that's fine. How is that working now? How are things going now, Europe, on the food and energy front? Game, set, match. I mean, are you serious right now? So, in my opinion, and I could be wrong, in my opinion, as long as we keep having stupid ass people in charge of important shit, it's probably going to keep being a giant clusterfuck. All right, so rant for the stream over. Let's keep rolling. Big D says, I was watching an interview with Druckenmiller. He said, there's a high probability in my mind that the market at best is going to be kind of flat for 10 years, sort of like 66 to 82 time period. Yeah, I've pointed that out on multiple occasions, where the likelihood based on demographics and, easy money / QE, that the probability is that we either have time capitulation or price capitulation or a combination of both. And we know that we haven't had time capitulation since basically that period between 2000 and 2008. And we only saw it in some of the major indices. Others actually put in new highs in that amount of time. But, I mean, it makes sense. It makes sense. I mean, similar to 66 to 82. I mean, probably. It depends. It's a unique situation right now because everybody tries to look at like one period in time and they're like, it's the 1920s. No, it's the 1930s. It's the 1960s. No, it's the 70s. I think it's the 80s. Well, I don't know. It looks like 2000. I mean, it's different. It's different than everything ever before. And we don't know how certain things are going to interact with each other and what's going to end up trumping everything. But, we can get a pretty good idea, obviously. So let's look at FEDEX. So this is the chart that I've had drawn for FEDEX for like literally years. And we discussed this quite a bit. And I remember being way up here at the top and saying it's possible we could go slightly higher. But, this is probably a wrap since we have this pretty clear resistance line up here. And then I said some crazy stuff. And I know it sounded really crazy at the time and probably still does. But I said that, likely we come all the way back down to the bottom of this ascending broadening wedge. And because this shot so far out of the bottom right here, I talked about how I didn't necessarily think we were going to put in a new low, but at least going to revisit the area down here at about 107. And if you look at this chart on a longer time frame, it makes a little more sense why I picked like certain areas to draw through and why I didn't, etc. Here's like the candle closes on the bottom with the wicks out there. Here is, we had to kind of pick this in hindsight after this busted out here. We had to kind of like look at that as essentially the resistance. We could have done it, I guess, like this. But once that first peak came in right here, it was pretty clear that like that or that was what we should be looking at. So regardless, we'll pick the top pretty damn closely. I think we actually used fib extension too. I cannot remember. It's been a while since I have been messing with this one. No, we didn't even make it to 1.236. So then anyway, after that took place, we discussed this exact scenario where basically we hit the top of the wedge. We're going to come back down to the bottom of the wedge. And now obviously with that gap down, I'm going to switch back over to the shorter time frame. Obviously we see now with this gap down, this massive gap down from 204 to 157. I think it's actually down more than it was earlier. 22%, 23%. Where are we headed to? Probably just the exact target that we've been watching for month after month after month. So when we capitulated through the 382, which all we did was, what did we really do? Well, we put in a low, we put in a bounce. The bounce was just another lower high, and then we came back down and revisited those lows. When we came down to those lows and the market said, oh shit, we're probably going lower, all the people that were assuming this was a low that bought down here or anywhere along the way decided, okay, I'm actually a net seller right now. And that caused this massive gap down. Now, we overshot the 0.5 completely, which is pretty wild. We overshot the heart line. Makes sense. Obviously, that was our next target, was like that 182 level. But, took a nice little trip down here towards the bottom of the range. So, we're in between the 0.5 and the 618. So, maybe we test back up to the 0.5, 168. Maybe we test down to the 618 next, 145. But the fact of the matter is, this seemed arguably crazy at the time. I seemed like a super bear when I was talking about, we were going to go from $315 FedEx to $100 on FedEx. And yet here we are. This move right here is a pretty clear indication, in my opinion, that we're going to see continuation. Now, do we see a pushback up, try to close the gap, chop around, and then continuation? Do we just go straight down from here? I don't know, obviously, but we know if transportation was one of our canaries in the coal mine, one of our four, major horsemen of the apocalypse, and again, it's just melting down, I would say that we're probably just one step closer to the apocalypse. But, you know, I mean, what do I know? What do I know? I just use charts that we've had for like multiple years and then go back to them, and, you know, exactly what we said happened plays out. But we're probably just lucky. Probably just the 8-ball. So DXY, I don't really expect a ton of anything out of DXY right now. In the next couple of days, it looks like it's just kind of chopping around sideways, hanging on here. This candle right here basically just crushed anyone that was speculating it was going to go lower. At this point in time, I mean, we spend 4 daily candles going down and then 1 to go back up. So then 4 more to just go sideways to down. And then what? We're going to get 1 more back to a new high. I mean, this is like classic continuation, in my opinion, right here. And all the people, I mean, are they even people? All the brain dead human retards that have been talking about how this was the end, the weekly candle, it was a gravestone doji, or it was a shooting star, or it was the end of the run. Well, now they look like fucking morons. We're 7 hours away from closing a bullish engulfing candle and a new weekly highest high in the trend. Hard buy signal, still trending to the upside, you know. 200 exponential crossing over 200 simple. I mean, this is why you don't try to call tops. This is why we don't try to call tops. Because everybody was so sure it was over, it was done. And now look at this. Monthly up here, new highs, powerful trend, going straight up. I mean, what kind of retard looks at this right here and goes, I'm bearish? The best kind. The kind that we take all the money from. That's it. So still short Apple, obviously. We talked about this in advance. Everybody and anyone obviously would not listen to this, or you're living in a van down by the river. But I did tell you guys I was taking this trade in advance. And it's well on the way. 17% to the downside was our target for the initial setup. And then obviously was the 31% to the bottom of the range. Now, is this going to pull a FEDEX and just gap down here? I mean, maybe not. Probably not. But, I mean, so far so good. I like my odds. It looks good. You're like, why would you short the strongest, bestest stock in the whole market? Well, because I'm a glutton for punishment. I don't know. Looks good to me. Tesla, you know, didn't quite get up to the top here. Still holding on strong for now. We'll see what happens in time. I think Tesla probably is setting up for a rejection right here. But again, we'll have to wait and see. The cult is really strong with Tesla. It does not surprise me that Tesla is staying strong. I was kind of surprised to see it go back over 300, but so Microsoft is threatening the lows. Clearly in a bear market. I mean, we don't need to go through like every single one of these and look at them because they just look so similar. But like, here's our weekly. We get the bull cross back up. We immediately get rejected and go back down. We're headed to the 200 exponential. You know, 221, possibly the 200 simple, 212. That has been and will continue to be my target. We're very close to the Microsoft bear cross. It's important to note the last bear cross, you know, we had was 2008 and then some chop afterwards. And then before that was obviously 2000. So Microsoft has gone absolutely parabolic since 2000. And then keep in mind, this is what I was talking about earlier. And a note to your Druckenmiller statement. This is what Microsoft did from 2000. And then the next peak in 2008. And then, you know, eventually takes out that high all the way in 2016. So in hindsight, Microsoft looks like a phenomenal company to be invested in. And obviously this whole like bull run up. But most people don't realize that from 2000 or arguably 99, from December 99 until, you know, and I think this always sums it up better. If you bought at the top right here, which obviously it's like, wow, you know, only if you're the worst investor ever or just have really bad luck, you know, to the low was 75% downside. And that was 3,379 days. So it was like roughly like 9 years and 75%. So is it easy to hodl for a couple months or a year? Can you stomach 20% downside or 30% downside for a couple weeks before we V-bottom and go to new highs? Sure, that's easy. What about the double capitulation? What about the time and price capitulation? If I told you you're going to lose 75% of your money if you just held on, would you still hold? If I told you it was going to take 9 years to reach the bottom, would you just hodl for 9 years and a 75% drawdown? Well, no, but you don't know that. So in hindsight, of course, you would say, I'm not going to eat 75% drawdown and have dead money for 9 years. Hell no. So if only there was a way to know when that was about to occur, or there was a possibility that something brutal like that could occur. If only there was an indicator on planet Earth that could signal us in with like a red cross of the 8 and 21 moving averages that something like that was going to happen. If only. But there's not. So we just hodl. So anyway, it took from that top 6,151 days and a 75% drawdown to get back break even. And we're literally approaching the 821 cross, the prerequisite to ever have an aggressive sell-off. The thing that must occur first before any massive drawdown could ever take place is happening right now. It's 2 weeks away from happening. That one thing, the only thing we have to worry about. Hard sell, we left the bullish control zone. All red histograms, the slope line has flipped over red. For the first time, again, since 2012 right here, when we're starting to build the bull trend. So am I bearish right now? Fuck yeah. Jesus Christ, I'm bearish as fuck. God damn, of course I am. All right, so Google, Alphabet Inc., Class A. And if you're curious, there's not really a big difference between Class A and Class B. It's voting rights. Most people don't really give a shit about voting rights, but naturally there's a slightly higher premium for having voting rights versus not. So that's your difference. Looks terrible. I mean, new lows right here. You know, we've already wicked down and put in a new low. So you can't even argue that it's like getting close to happening. It's already happening. And then again, if we look at, and tech obviously looks different, what took place in 2000, 2008, depending, etc. I mean, but Google just ripping to the upside right here. Ripping. And now, you know, arguably, we're getting ready to backtest at 200 exponential and simple. So maybe you say, well, we're getting ready to bottom. Temporarily, maybe. But this is just red flag as it gets. 821 about to cross to the downside. 2008 meltdown right here. Are we going to go all the way down? I mean, you know, your guess is as good as mine. But I know if there's like one thing that's like, if I was driving down the road and I just had a buzzer that went off. It didn't go off very often. It was like once every like 4 or 5 years. And the buzzer would just go off super obnoxious, like out of nowhere, all of a sudden. Right before there was a super high likelihood that I was about to get T-boned by a cement truck. Or like rear-ended, you know, by a school bus, or, you know, head-on collision from, you know, a dump truck. And that was the only time it ever went off. And the rest of the time I just drove around and, you know, everything was fine. Occasionally, like, I'd get in a little fender bender, or I'd run out of gas, or, you know, somebody would key my car in, you know, Target parking lot, whatever the situation. Like, there's some danger out there still, but nothing terrible. But when that buzzer goes off, and there's a really high probability I'm about to get hit by a cement truck or a dump truck or a school bus, or, you know, an aircraft carrier is about to, like, you know, launch a missile onto my exact location. Whatever the situation is, impending danger, like fatal danger, and that buzzer goes off. Am I going to just ignore the fucking once every 5-year buzzer? Or should I just maybe be like, hey, I'll just like double check, make sure there's no buses coming? I mean, obviously the choice is yours, but you know what I'm doing. Nvidia just melting down, just getting absolutely destroyed, completely crushed. Just a complete garbage stock. Obviously, you guys know how I feel about Nvidia. I mean, it was one of my faves back in the day, but it's looking ugly now. Monthly cross already happening. You know, there's a lot of confluence right here too on the Nvidia chart between the 2018 peak at $70 and like where the 200 exponential moving average is going to be. Now, there's also some confluence down here, maybe with the 200 simple and some of this support through here. So, or is Nvidia going to $40? Is it going to $70? 60? I don't know. I mean, but there's definitely a possibility. We put up these fibs too. As a matter of fact, I'm going to go to the weekly for this. When we put up the fibs on Nvidia and just like reasonably look at where could some of these like targets be, the area that first makes sense to use is our local low right here, which was obviously like the 2021, you know, March dump, etc. The Rona low. And then if we go back a little further than that, we have this low down here from December of 2018. So the multicolored fib is this one from 2018. And then this is the Rona fib in green right here. Let me just extend them out a little bit more. So the Rona fib, we're already at the 886. So in all actuality, you guys know the 886 is useful at times, but the probability of coming down to the 886 and then reversing back to the upside, extremely, extremely low. Extremely, extremely low. So what we're looking at now is basically like, okay, this green fib is basically irrelevant at this point in time. I mean, if we go any lower, we're putting in a new low or threatening the low. If we don't go any lower, it reversed on the 886, which we don't expect to happen anyway. So it doesn't really give us any new information. So previously we were at the 236. We came down to the 382. Now we're losing the 382. Next likely area we come down to is the 0.5, which is obviously our next target entry for another attempted counter trend scalp. You know, on the weekly, obviously, you know, less probability of success because it's counter trend, but could be an aggressive move to the upside with a nice risk reward ratio. But our entry on that is like 103, round 100 basically. At that point in time, though, if we come down to 100 and then we get the move that I'm expecting or looking out for, you know, then we start looking at this and we're like, well, wait, this is starting to look like a left shoulder, you know, neckline, head, neckline, right shoulder, neckline, and then what? I mean, are we like, we could stop at the 0.5 and that's it. But, you know, likely we come down somewhere between the 0.5 and the 618. So that's $78. Maybe we have a deep retracement and we go back down to the 2018 peak. Maybe we have a really deep retracement, come down to the 786, puts us at like $52. There's a lot of confluence for some of this stuff to go way, way lower. And again, you know, we look at NVIDIA as sort of like a gauge for the overall semiconductor space. But in all reality, when it comes down to it, I mean, the semiconductors are one of the four horsemen. So if this is telling us, hey, things might be about to get like nastier than they already are in the semiconductor space. And again, I'm still very, very bullish on this long term. But, you know, we got to look at like secular and cyclical bull and bear markets and understand when they're happening. Meta is obviously complete trash. Melting down from the 786. At this point in time, I mean, you guys know there's only one target left for Meta, 0. Or no, I'm sorry. There's more than one target. There's the macro 382 in green right here, and also the lows. Other things are talking about getting to the highs of 2018 or the highs of Corona. Meta is already like threatening the lows of the Rona dump. So you're like, oh, I'm the best investor ever. I literally bought the bottom of the Rona dump in Meta and just rode it to the moon. And then rode it all the way back down to where you break even. So if you were the best investor ever and you bought Meta at the absolute bottom, you're now back to break even. Congratulations on investing in the shittiest stock ever. Maybe not ever, but pretty close. So we'll see what happens at 124. I would expect that to be some strong support. Obviously the macro 382 is there. If we go all the way back to this like macro swing low of 2012, I mean, you guys see it. There's a 0.5 target, like $82. Obviously going to take some time to get there, but I mean, at this point in time, there's no denying what's happening right now. Amazon is next. So Amazon had a pretty big gap down. It had been holding up fairly nicely here. Did backtest multiple times, gap down here, and then gap down to a new low. Took out the local swing low. So at this point in time, there is a decent amount of support through here, but seems more likely than not that Amazon will just follow everyone else and go to 102. So it's at 122 now. People are like, oh, this is a great buying opportunity. Like if you loved Amazon at 143, I mean, you really love it at 122, right? Well, unless it goes to 102. And then you fucking hate yourself and probably take it out on your wife. And if you have any cats, probably them too. I like to think that you keep it real with your dog, though. So, you know, he knows something's wrong. He's like, you got fucked up on Amazon, didn't you? And you're like, yeah, man. He kind of cuddles you a little bit. You don't resent him. But the cat and the wife, I feel bad for them. So anyway, Amazon, yeah, I mean, you guys know. You know how I feel about all this stuff. That's the beauty of telling you what I think is going to happen in advance and then it just happening over like weeks and months afterwards is we just be like, yeah, the thing we said. All right, so let's look at crypto. So what has changed on crypto? Why am I still even long any crypto right now? Like, am I just an idiot? Am I a deer in the headlights? And I'm just afraid to take the L? Is there still potential that we can move to the upside? Are all those things true? Are none of those things true? I would say it's probably a very complex blend of all of those scenarios. But the truth is, I've been close to exiting a couple times, but we're still holding up support for now. Doesn't look great, though. Let's be real here. Doesn't look great. We're basically at my last line of defense support, which was basically this cluster of lows. And I'm watching for a 4-hour close. And we basically closed the recent 4-hour, the noon 4-hour is literally just at support. So you're like, oh, do I want to sell right now at support? Or do I wait till it breaks, closes below support, and take a little more of a loss? That's typically what I do. I mean, could you sell into support, assuming it's going to break? Sure, but odds-wise, I don't like those odds. So Bitcoin on the daily here, Bitstamp, it's basically had the 821 cross and then the rejection. So now it's bearishly crossed back to the downside. Seems very likely that we're going to come down here and threaten the lows. And this is also, 3 touches right here and then a 4th touch here. Does it hold when we come down for the 5th touch? Does it break? Do we close below that? I mean, the real question is, here we closed a new low, technically, below our lowest low. We still have wicks that have gone down lower, but we closed a new low. And then after that, we had an aggressive rally to the upside. But if we come back down here again and do the same thing, I don't think it's as likely to hold. Now, if we come down and put in a higher low, maybe it holds. But if we come down and put in a lower low again, I think it's like literally trapdoor, bottom falls out, bloody waterfall, Michael Saylor, like self-terminating, tough situations. Okay? Tough situations. We'll see what happens though. We'll see what happens. I mean, we could find support here. We can move back to the upside. Doesn't look good in my opinion. This looks like a pretty clear rejection. We were trying to cross back to the upside. We lost that level. We'll look at Ethereum in a second. It's even more crystal clear rejection. We can look at the 4-hour and then we're going to go to our longer time frames as well. So on the 4-hour, this is what I'm watching. We basically have these 2 lows right here. We have this wick. We have this wick. We have these 2 lows right here. And we're at that level. So, and to tell you the truth, if you were asking me right now, hey, do I want to enter into a long at this level? Like, do I want to buy right now? I would tell you, honestly, I mean, it's not a great time to buy, obviously, but it is at a pretty key support level. So it's an easy time to know, am I right or am I wrong? Well, how would I know? Well, if we go lower and close any lower, I'm wrong and I want to get out. So tight little stop loss, perfect. Well, am I right? Well, if we don't go lower, I'm right. So this is a great area to go off of, a key pivot point in the market. But, at this point in time, we have everything going against us. That 8 and 21 are cross bearishly, the 200 exponential and simpler are bearish. We're melting down. We're threatening like the macro lows. Indicator oscillator wise, we have a hard buy signal. We're leaving the bearish control zone. We have a bunch of green histograms. There's an argument to be made that we could see a decent little pop up here. And the whole idea of this trade was to play the move back up to like 21K to retest the 200 exponential and simple, which obviously did not happen. Arguably on the daily, we retested those levels, retested the 8 and 21. Right, no, what was I on the daily? I can't remember what I was looking at on the daily. Oh, yeah, the 8 and 21. Yeah, we backtested 8 and 21. So you could argue that the backtest already took place on the 8 and 21 on the daily, which would have been the equivalent of a lesser move, but the move back up to retest the 200 exponential and simple on the 4-hour. Sorry, a little brain fart there. But I mean, it looks like the stochastics are rolling over. It looks like a clear rejection. We lost 821 potential bull cross, which was a lot of the argument to begin with. So, basically what we were looking for is aggressive selling followed by aggressive buying, followed by aggressive selling, followed by aggressive buying, followed by aggressive selling, followed by. So we were looking for something like that. Now, it hasn't happened yet. Doesn't mean it's not going to happen, but very close to taking the L and pulling the ripcord on that one. And it's not like, oh, I just got decimated. It's like a small position with like, it was like 2.5% potential, 3% stop loss, something like that. So, obviously I'm stubborn and hate taking losses altogether, but when the trade warrants it, you got to just get out and reevaluate. And I'll gladly just re-enter if things change, if I do have to exit or decide to exit. So if we go to the weekly now, this is what we've been talking about, how much danger we're in right here. Basically just coming up, getting rejected, and coming back down to the lows. Very close to closing a new weekly low, which is obviously terrible. Literally like, well, on the spot chart, a couple days away from that. On the futures chart, a couple hours away. Hard buy signal, nothing happened since then. Bunch of green histograms, nothing happened since then. So what is this? Is this just another bearish reset, exactly like we saw right here, followed by capitulation? I mean, it looks like it. And you guys know, obviously, 20K is the key level we've been watching. I mean, it's really, really looking like 14K is the target now. So we'll see what happens. Obviously, I'm not going to get like overly bullish or bearish before or after a move happens. But, I mean, look, everything is just saying Bitcoin is about to get wrecked right now, in my opinion. Short term, maybe we get the little pop. But long term, it looks terrible. So Ethereum having the meltdown, obviously, that played out perfectly. We talked about the two scenarios, basically what could be happening right here, which is essentially the bull case scenario for, you know, the ETH bulls for the potential fib setup was a 5-wave structure to the upside like this. You know, 1, 2, and then a little sideways action. And then this was our 3, that was our 4, and then we're setting up for a 5. My scenario was, and I thought I had it on here. My scenario was that the 1 already played out. And this is, you know, fibs are always a little subjective, but essentially what I was looking at was that was the same 1, 2, and then the 3 that took place finished right here, and then this was a 4, and then that was actually the 5. So let me switch this white right here. And we did the breakdown in that. If you didn't watch that Ethereum breakdown video, we took from the macro low right here, and then fib to the high right here, and we had a 61.8 retracement. So that was good either way for the 1. And then here we basically had just not a lower low, but all part of the same move. And then here we had the 3 up here, and we had a 382 retracement. Now that was my theory, was that that was actually already the fib. Most people were looking at it like this is just a really big 3 right here, and that we're at the 0.5, which was viable. It was definitely a possibility that we had the retrace to the 0.5, and that we're getting ready to put in a new high. It's pretty clear, obviously, now, and again, this is like fibception to like the nth degree. It's pretty clear now, if we take from this high right here, and then we fib down to that low right there, that actually it was just a 61.8% retrace of the move down to a lower high, and now here we are threatening the lows again. So there's a very high probability right now that we're going to break down from here to a new low. We obviously have this ascending yellow line. I told you as long as we were above that line, I was still technically bullish on ETH, and I would take the L on this one and admit, you know, obviously I was wrong about the 5 waves already being in. Well, the opposite happened. We maxed out right here at the 618. We came down, we had the bear cross, 821 on the daily. We lost the key macro fib at 1622. We lost the ascending yellow support, and now we're threatening the lows right here. So it's pretty obvious now that this scenario, the bull scenario, will not play out. It's pretty obvious. Now, is there a possibility it double bottoms, rips back to the upside, and then we keep going? Sure, but it's pretty obvious now I was correct. And that really all this is, because remember, this white move right here, this 5-wave structure that I put in here, all that white move is just part of the big move in red. And the big move in red is 5 waves down. So we have 1 down, we have 2 back up, we have 3 down, we have 4 back up. It hits the level almost exactly of the bottom of the 1, but does not retrace on a longer time frame inside of the closes by more than a wick. And now it's rolling back over, so that's our 5 waves done right here. So now that's our 1, our 2, our 3, our 4, and now we're just getting ready to put in the 5. And where does the 5 likely take us to? Well, we know the 1.618 of the previous move to the upside right here. We have obviously tons and tons of other targets from our low down here, which was the 2 at $88 up to the top here. You know, obviously some targets based on that. So we have the macro 0.5, we have the macro 618, we have the 1.618 Fibonacci extension. You know, obviously we have the 2.618 down here. So we have a bunch of different other levels. The most relevant levels right now, in my opinion, are where we're at now. If we break down further, it's very clear that, you know, that situation I'd said played out, and we were right. There's no 5th wave coming. And, you know, that's exactly how. Here's the thing about ETH. It does that a lot, okay? I'm not, like, I didn't just, like, hack the system. I didn't get lucky. I didn't, like, use some secret code that like nobody else knows about. No, I use basic technical analysis, but I've been trading Ethereum for like years after years after years after years. And Ethereum is known for putting in what looks like it's about to be a pretty clear 5-wave structure, and it's getting ready for its 5th wave up, and then the 5th wave fails. It does it literally all the time. All the time. I know this because I got wrecked on Ethereum doing this to me before on multiple occasions. Well, I got wrecked once, but it's done it to me on multiple occasions. So I'm speaking from experience, and as someone that, you know, typically does pretty well in the markets, and obviously TA-wise, I mean, you know, definitely know my stuff. I've gotten tricked by it a bunch of times. So it makes sense that a lot of other people get tricked by it. And obviously, you know, fundamentally, we're going into the merge, which is a big fundamental event. So we know, obviously, you buy the rumor, sell the news. So that was the big breakout right here, was buy the rumor, the lead up. It became popular, became mainstream. And then it was like, here comes the next big 5th wave. And then it's going up to 2,500 and all this stuff. And the Ethereum, Bitcoin dominance and all this stuff. And then next thing you know, oh, look, a big failure. So what's going to happen now? Well, Bitcoin's at the lows. So let's be real. This is where the pain comes in. Okay, Bitcoin's already at the lows. So if it breaks down to new lows, it's going 1% below the lows, 2%, 3%, 10%, 20%. If Ethereum just revisits the lows right now, it's a 37% move. It's 37% just to back to the lows. So the downside risk in Ethereum right now is extremely, extremely fucking high because it's still 38% off its lows. So if it goes back to the lows and then decides, oh, and then on top of that, I'm going to take another leg down. Matter of fact, I'm going to go to the 1.618. I'm going to go to the macro fib. You know, I'm going to go all the way down to the bottom of that potential, you know, 5th wave, etc. I mean, you're talking about 54%. You're talking about 64%. You're talking about, you know, minimum. That's a big move down. If Bitcoin goes down 50% from here, you know, we're talking about $10,000. Ethereum goes down 50% from here, and it's only at $500. Wait, no. Well, you know, somewhere around six something. But anyway, you get my point. There's a lot of risk right now in Ethereum. It's definitely in the danger zone. It has lost key levels. The 821 has flipped bearish. The merge has happened, and it turns out that, oh, look, just like we said in advance, what is the merge? It's a non-event. It's not going to make Ethereum faster. It's not going to make it cheaper. It's not going to make it more fun. It doesn't get like some new logo. It's not all of a sudden going to get adopted by people. Literally the only difference is it just goes from proof of work to proof of stake. So you're like, well, that's bullish because we're in an energy crisis and it's better if people are staking than spending a bunch of energy mining. To which I would say that's a valid argument. That is a valid argument. As long as it doesn't contradict other arguments like Ethereum is decentralized. So, for instance, let's just say I was Vitalik Buterin. I was a robot human created by Elon Musk who was influenced by aliens. So let's just say that I was that creation, that cyborg who is Vitalik Buterin. I would probably, I mean, after like literally multiple years of postponing the merge and like all just the trash that has happened with Ethereum, if it was me and we were getting relatively close, I mean months or a year, maybe 2 years away from the SEC or, you know, other important regulatory bodies regulating my cryptocurrency. And let's just say, you know, keep in mind, I am Vitalik, the alien influenced robot cyborg built by Elon Musk, who is the creator of Ethereum. So just remember all those hypotheticals. I would probably just hang fucking tight for like 6 months or a year or 2 years or whatever until the SEC officially says whether or not I'm a commodity or a security. Because I think up until now, there was a decent argument that Ethereum is actually a commodity, similar to Bitcoin, and that like it shouldn't be regulated, you know, by the SEC. Now, part of that argument is decentralized, like the decentralization or decentralized like aspect of the crypto. So again, you could say that for Bitcoin, it's a bunch of people mining in all different places around, but now you're going to have a very concentrated group of people there's a pre-mine. There's people doing work that, you know, you're going to speculate on this asset because of the work that they're doing is likely to create value. I mean, it sounds a lot like a fucking security now. Any argument of a commodity before, just in my opinion, got way, way worse. So you could have argued before Ethereum also a commodity. Gary Gensler even said it. He said it, Bitcoin, and probably maybe there's a hint of Ethereum in there too as a commodity. Well, I mean, go ahead, take that argument, lay it out clearly on your desk, okay? Read through it, straighten up like the corners of the paper and everything, and then just go ahead and read through that, and then go ahead, pick it up in your hands, crumple it into a ball, and throw it in the fucking trash. Because now Ethereum is clearly a security. I mean, it's clearly a security. And if it's not clearly a security, it's at least more a security than it was before. So do I think this is a great idea? It literally did nothing beneficial, but now we don't use as much energy. Hooray! But now probably your whole project is ruined because it's going to have to get dropped by, I mean, what, every exchange? Because, I mean, I don't think the exchanges are just going to continue having unregistered securities once it's ruled a security, if hypothetically it is. I don't know. That's my rant on Ethereum. I mean, I'm just saying, if a fucking cyborg human created by Elon Musk who is influenced by aliens can't see that that was probably not a good idea, I don't know what is. So does Ethereum go straight to zero tomorrow? Probably not straight to zero, but it's, I mean, the chances just went up. Ethereum Bitcoin ratio. Obviously, everybody's been like super pumped about this. This is like the big chart that everybody cares about. I mean, does this look good or bad? I mean, the recent run up is good. It's back on top of the 200 exponential and simple. That's good. It's threatening the recent lows right here and probably coming down to retest the 200 exponential and simple. The problem is it's chopped around here so much that, you know, we went from a pretty clear bull market to like some chop to a pretty clear bull market to like some chop to maybe we're going into a pretty clear bull market. Maybe we're about to roll over and, you know, we just like double or like triple topped. I mean, it could go either way right here. I don't love what's happening right now. When I look at this chart, this is what I see. Okay, I see a really, really clear downtrend, and we spend a little time outside the downtrend. I see clear interactions with the heart line along the way. And then I see here, you know, a high, or I'm sorry, a low, a high, a higher low, a higher high. Okay, now we're in an uptrend. We broke out of the downtrend. You know, we have a little poke out the bottom here. We spend a little time hanging out above it right here, come all the way back down and retest it. So in my opinion, where are we at right now? Right smack in the middle. Right smack in the middle of the channel. Now, again, sometimes we go outside the channel to the upside. Sometimes we go outside it to the downside. But, you know, looking back at this chart right here, the percentage of time that we spend inside these two channels is probably like 75 to 90. Probably close to like maybe 80 right here. At least like 60 to 75 right here. So for me, I think more likely than not, you know, we probably retest either the bottom of the channel or the top of the channel. So we have the 200 exponential and simple right here. Seems more likely we're headed down towards the bottom. You know, if we break out to the top of the channel, it's going to look pretty bullish. But right now, looks to me like we're headed to the bottom of the channel. That's our daily. If we look at the weekly, looks okay. We bounced the 200 exponential perfectly. We're back testing the top right here. Again, does this look like a triple top? Here's the big issue now. Here's what you really have to worry about now in Ethereum, okay? Here we had a high. So anything we did after this high is okay. It doesn't matter. We can go in and put in a low. We can go put in another high. It doesn't matter. It's not bad. Once we put in a low, though, we need to not put in a lower high. So we have a high, we have a low, and now we have a potential lower high. So if we put in a lower high right here, seems very likely we come back down and revisit the lows. And then if they hold up and we put in a higher low, say we come down to the bottom of the channel, now we have a high, we have a low, we have a lower high, but we have a higher low. So we start forming like a triangle, and then maybe we can break to the upside. If we come down here and put in a new low, we're going to have the beginning of a downtrend, and probably, you know, likely a new channel is forming. You know, we have a clear long bear channel, a clear long bull channel, and then we're likely entering into another clear long bear channel. And now this is Ethereum compared to Bitcoin. So, you know, what does that mean in real life? I mean, you got to figure that out. But, you know, obviously nobody talks about stuff like that. Crypto total market cap, it just looks absolutely disgusting right now. It basically looks like, say you're at like a real hoity-toity party and everybody's all dressed up, you know, black tie affair. You like, you know, got your little champagne flute and, you know, some little appetizers. Everything's fine. And then, something's not sitting right. And you just throw up a little bit in your mouth. But obviously, you're at like a fancy party. Your boss is there. You know, either your wife or some chick you want to fuck at your work, or maybe both. You know, you don't want to just like puke it up in a napkin or whatever. So you swallow it back down. That's what this looks like to me. It looks like the crypto market cap threw up in its mouth and now it's just swallowing the puke. So are we headed back down here to new lows? Yeah, probably. This looks terrible. It had all the opportunity in the world to move up. All these green histograms in a row, hard buy signal, left the bearish control zone. Nothing. So what does this tell us? This is back to what we were talking about earlier, you know, about cupcakes and beef jerky. Okay? There's so many cryptos. So fucking many cryptos. All those cryptos together were worth, arguably, market cap wise, $3 trillion. And now somehow they're only worth 900 billion? And even when we find support, you know, we're talking about like a little $200 billion range. I mean, that's pathetic. That means that, like, you know, there's still people paying big money for cupcakes or beef jerky, you know, whichever one Ethereum is. There's still people paying kind of big money for Bitcoin. But a lot of like the altcoins, a lot of the Brussels sprouts and the asparagus or whatever, nobody's paying shit for them. And I mean, that's likely to continue. I don't see any new flows coming to crypto. People are like, no, it's the institutions are coming in now. Oh, no, it's Karen is selling off a lot of like the kids' old clothes on Facebook Marketplace and raising funds for her next seed investment. I mean, is that what we're waiting on? Karen to sell off the kids' clothes that they grew out of? That's our next big buyer that's going to come in and prop up the crypto market? Karen? From the PTA? Okay. All right. I mean, you could be right. But I don't know. I don't know if I want to stake my future on Karen and her investment advice. Bitcoin dominance, the regular Bitcoin dominance chart, still terrible at the lows. The real Bitcoin dominance chart minus the stable coins. What is this telling us? This looks a lot stronger. Nowhere near the lows right here. So here, when we factor out all of the stable coins, when we take those out of the mix, Bitcoin's like triple bottoming here. And now when we come back down, Bitcoin is holding more market cap. So it means less people are running to stable coins and more people are running to Bitcoin. So it's telling us that people are less confident in stable coins or more confident in Bitcoin, as opposed to right here, where when we don't look at this, you know, this is the area we're looking at. When we don't look at the difference between the stable coins, it looks like Bitcoin is losing dominance compared to the crypto market. And it is. But the dominance is not in some shit coin. It's not in some altcoin. It's not in Ethereum. That's not what's taking dominance. What's taking dominance is stable coins. So there's more people using stable coins as a hedge instead of using, you know, trash bag cryptos as a hedge or an investment or whatever, speculation. So that's an important note. And when you couple that with, you know, the total market cap chart, I think it starts to paint a pretty clear picture about what's really happening in the crypto space. All right, let me jump back in the comments here, and then we got a couple more charts to look at. We're right about an hour and a half, so we'll try to wrap it up in 30 minutes. Call my Betty, what's up, man? Next drop coming, Bitcoin 9K. Hi, Angel, what's up, man? Good to see you. Parag says, what's happening, everyone? Good to see you, Parag. Another banger stream by Crypto Trend Trader. Thank you. For sure, man. Glad you guys are enjoying it. And if you are currently enjoying the stream, or you're like, I don't really care about this financial stuff, but this guy's borderline funny. Or maybe you're like, this guy's not funny at all, but seems to know some shit about, you know, stocks and cryptos. Or just, you know, whatever, has a nice voice. I don't know. Smash that like button up, okay? Don't be a bitch. All right, so let's look at gold. So gold did something that we've been expecting for some time now. very important, broke down to new lows. So gold put in a new cycle low. It joined the, many other assets, many other stocks that have put in a new cycle low. So obviously that's bullish, right? No, it's not. It's very, very bearish. So very, very bearish. And was it just following in silver's footsteps? Yes. Yes, it was, because silver had broken down already a while ago. You guys know our clear targets for what we're expecting potentially for gold. The most important thing is, and I've showed this a gazillion times, but the most important thing is this monthly chart. If we just flip over and look at this monthly and we just say, hey, you remember that buzzer we put in our truck and it was only supposed to go off when we were like about to get hit by a cement truck, or there was like incoming, Stinger missiles, or, we're about to get rear-ended by a bus driver. I mean, this is it. The buzzer's going off, right? The 8 and 21 cross to the downside right here. We know what that means. There's potential for, a missile incoming or a cement truck incoming. We know the backtest rejection off the blue slope line, the backtest rejection off the blue slope line. I mean, this is everything telling us gold is likely about to melt fucking down. So what does that mean? Why would gold melt down compared to the US dollar? Why? Now, and that's important too, because if you live in another country right now, gold might literally be at new all-time highs. Gold might be just absolutely crushing it. If you live in Turkey, gold is going parabolic. If you look at gold compared to the US dollar, why is gold so weak? Well, because the US dollar is strong. Obviously, that's not helping. But also, if gold is supposed to be this long-time purchasing power hedge, or quote-unquote inflation hedge, which it is over a long enough time frame, but you have to understand, when you're looking at a gold chart, we're talking about multiple thousands of years of history. So what happens on a daily or a weekly chart is a lot less substantial. When we look at Bitcoin, we say, okay, we have like 12 years of history we can look at. So we can't even really look at a monthly that effectively. When we look at gold, I mean, it's only charted back so far, but we literally have like biblical era like comparisons, and you're like, oh, but I don't believe in the Bible. It's just bullshit. It's all like Catholic fucking propaganda, man, and you just don't understand. I don't give a shit about any of that, okay? Put all that aside. Who the fuck cares? Okay? Whatever old texts or cave drawings or fucking like temple carvings or whatever it is, we have reference for thousands of years of gold being basically a medium of exchange between various other things, whether it's, food or, labor, whatever it is. So that's what we're looking at. So when we look at the gold chart, we can say, hey, gold could have a rough 25, 50 years and it doesn't change the multiple 1,000-year outlook on it. If Bitcoin has a rough 5 years, I mean, it's a dead asset because that's, a third of its life. And I mean, I'm not saying it's actually dead if it goes into a 5-year bear market, but, there's a strong argument to be made for it, as opposed to a 5-year bear market in a multiple 1,000-year-old asset, etc. So what do I see right here? It looks to me like gold's in for a tough couple years, months, whatever. So what does that mean? The market's saying there is no inflation. There's not going to be inflation going into the future. We're going into a recession or depression or something like that. People believe in their governments. If gold is a hedge against governments and failure, and, obviously if people aren't buying gold, then nobody's worried about governments or failure or anything. There's a lot of arguments to be made here, but the fact of the matter is, whatever the narrative is, it's like central banks are buying gold. We're stopping the COMEX. Like, nobody's buying it. You want to talk about COMEX? These fucking people. I don't know what it is. I wish, honestly, if I could go back in time and never have bought any silver ever, even though I'm massively up on my various silver positions and having taken profits from, if I could literally go back and never have bought any silver, I would do that, because the community around silver is the worst community I've ever seen in my life. It was like borderline peak crypto, like have fun staying poor, like type community. I mean, it's absolutely ridiculous. Okay, quick rant about silver. There's like this whole, silver squeeze 2022, drain the COMEX thing going on, blah, 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 blah. All these fucking retards just standing around in a circle, jerking each other off, trying to convince each other how great silver is and how their horrible investment is someday going to pay off. Okay, sure. That's fine. But what really blows my mind is they're talking about like the difference between allocated and, okay, without getting too complicated, essentially, you have like your COMEX numbers, which is a bunch of silver that's basically just like being stored by like COMEX registered vaults. Okay. So it's basically like silver storage facilities. And that then allows you to basically trade or invest in silver without physically holding like pounds or ounces or tons of silver, because it just takes up a lot of room. It's bulky, etc. So they keep it safe for you. And then you're able to basically trade those contracts with other people to speculate, so you can short to speculate against your positions. You can long to increase your exposure, all that good stuff, right? So they look at these numbers of like silver basically that's on the COMEX, and they say, oh, look, all the silver is getting drained off of the COMEX. It's getting drained off COMEX because now it's not available. People aren't offering to sell it at these prices, because that's really what the COMEX is. Okay. You either have silver and you're willing to sell it at these prices, or you have money and you're willing to buy someone else's silver at these prices. So it's pretty basic. Okay. And it's just done on paper, because it doesn't make sense for me to buy a bunch of silver, keep it at my place, and then when I'm ready to sell it, now I'm going to like ship it to somebody else who wants it. No, so you just keep it all in one spot, and then you're able to trade those contracts, and the ownership transfers, but the silver stays in the same fucking spot. So there's two ways they classify that silver. Okay. It's whether or not, and basically like, does the COMEX have silver? Yes. This is how much silver it has. Does the COMEX have silver that is for sale? Yes. This is how much silver is for sale. So that's the two levels of silver that the COMEX has. It's the silver that they actually have, or it's the silver that they actually have that someone is willing to sell at said price. So bear with me now, okay? I know this is pretty simple, but if the price on something is consistently going down, if it's going down consistently, okay? If let's say it was at, for instance, 30 and now it's at 19, would you expect more people to be willing to sell their silver at $30 than you would expect to be willing to sell their silver at 19? Or would you expect less people? If I own silver and it was $30, I might think about selling it. If I own silver and it's $19, I'm probably less likely to think about selling it, especially if it's literally just been living between $19 and $30 for the last like 2 years. So their huge, like massive, we're draining the COMEX situation is all based on this whole theory that they're somehow, by taking physical delivery of silver, that they're depleting the supply of silver, the paper contracts that are held by the COMEX. And then if they just keep doing it long enough, that there will be no more silver for sale on the COMEX, and that the manipulation will be over, and then silver can just skyrocket. It goes to $300, and then everybody just, pops champagne and lives on the moon, and, silver was right, and the apes win, and all that good stuff. Okay, sure. That makes sense. Not at all. I mean, what the fuck are these retards talking about? If I literally tell you, hey, let's just take silver out of it, and let's just say, hey, there's this exchange where they can just keep your dollars for you, your dollar bills, your $100 bills, whatever. And then there's going to be times when people need your $100 bills and they're willing to pay you $1.10, or dollar bills are willing to pay you $1.10 for it. And then there's going to be times when people don't need your liquidity. There's tons and tons of dollars floating around, so they're going to only want to pay you 90 cents for it. Okay, but we're going to keep all that money on this thing called the COMEX. We're going to keep all these bills, these physical bills on the COMEX. Okay, so there's $1,000 kept on the COMEX, let's say. That doesn't change. Some people are taking physical delivery, some aren't. There's, like dollars being deposited, the physical deliveries, people taking dollars off it. Sure, that's going to fluctuate. But then the money that's on the COMEX, the dollars that are on the COMEX, they can fluctuate up and down between like allocated and unallocated, funds, basically, whether or not they're just holding it for people, or whether or not they're holding it for someone and that person has specifically put those dollar bills up for sale. So if at times you can get more money for your dollars because they're in high demand, would you expect there to be more sellers when the price is higher and there's more demand, and then balance out the market? Or would you expect there to be less sellers? Of course you would expect there to be more. And then if you could buy that same dollar, but now it's only 90 cents, there's going to be plenty of people that want to buy the dollar at a discount, but there's not going to be nearly as many people that are willing to sell the dollar at a discount. So now we have basic principles. So now let's switch those back to silver. And I know this is really just blow anybody that likes silver's mind. But now, would you expect people to pay more, or I'm sorry, sell more of their silver at a discount? Or would you expect more silver sellers when the price is high? It's obvious. It's obvious. The price is higher, there would be more sellers. The price is lower, there would be less sellers. So the whole idea of draining the COMEX is actually just, hey, the silver price has gone down so much that people just don't even want to sell it anymore. They just say, fuck it, I'll just keep my silver. It's common sense. And this is like their whole entire argument is based on this predication that they're draining the COMEX. These fucking morons. They're brain dead. They're actually brain dead. They were draining the COMEX at $30. Well, great job. You bought the top. You tricked the COMEX into selling you physical silver bars at the absolute top. And then you paid thousands and thousands of dollars. Well, yeah, pretty much. To have them shipped to you. And great job. Congratulations. You're a fucking genius. Holy shit. So yeah, gold, silver. Come on, guys. What we are seeing right now is interesting on the gold-silver ratio, though. We did see some aggressive moves in silver lately, basically turning into some selling in the gold-silver ratio. So obviously silver is strengthening compared to gold. This is what we were expecting. We basically got back on top of 200 exponential and simple. We expect to come back down and back test it. If it holds as support somewhere around like 82 silvers per gold, we then expect the potential to move back up here and potentially go to new all-time highs. So we'll have to see what happens. Obviously, the retest on the weekly of the 200 exponential and simple is key. Expecting that area to hold $80. $80 is, 80 to 82, somewhere around there. I would expect to hold. All right, so I want to talk about this on last stream, but on Friday, or what was it, Wednesday, the gods of TradingView struck me down. So this is GDXJ. This is the gold miners, but it's the juniors. So it's like the shit coins of gold miners. Not the good ones. It's the cum rockets. It's the Lunas, okay? The ones that are probably going to zero. But it's an interesting thing going on here. Been trading inside of this pretty clear range for years at this point in time, since August of 2020. We poked out a little bit right here. Had a breakout. We talked about this actually on why I thought it was going to be a fake breakout. Obviously worked out like that, and then sold back off. Since then, it's come all the way back down to the bottom of the range. It broke through the 618, which is from the capitulation event 2020 to the peak right here. So we broke through the 618. We reclaimed it, back tested the 0.5, broke down from the 618 again. But we're at the bottom of the range. We had a couple times where we put in basically like these double bottom lower lows, either off the heart line or off of support. So I'm not saying I'm necessarily jumping in right now, investing in gold and silver, or particularly gold and silver miners. But there's a strong argument that, there's some meat on the bone. It's like a 26% range inside of here. Now, obviously, I would prefer if this just kind of goes sideways and kind of chops down and comes down to the 786, and we get a nice technical horizontal level to buy that also corresponds with the descending channel as well. That would be ideal. Now, are we going to get that opportunity or not? I don't know. This is that other key level that we were watching from way back when, because there is just so freaking much support and resistance here. I mean, arguably, obviously, you can see where price action is right now. But I mean, arguably, if we pick this point right here, which we're only picking that point because it lines up with a bunch of others, because you could say, well, what about this point right here? Well, this point right here is actually a pretty good support. We have support here, we have support here, we have support here, tons and tons of support and resistance the whole way. So I wouldn't argue against you that you could just as easily pick that point. But that's not the one we're paying attention to. Let's pay attention to this one because this is where we're at right now. Again, support, resistance, resistance, support, support, all through here, this descending triangle, breakdown. It was a fake out W, double bottom, back test as support, back test as support, shot up here. And now that's where we're at now. So, I mean, I don't know what's going to happen. I don't know if we're going to shoot to the upside. What I'm looking at, though, is the potential next move. And for me, the potential next move on GDXJ is basically one of two things. It's either going to find support here after multiple tests and then push to the upside, and that's our 20+% move back to the 0.5, back to the top of the channel, back to the 200 exponential and simple. So, roughly, let's say 25%. And then the alternative is we break down from here and we retest the next fib, which is the 786. So that's 12%. So it's not quite 3-to-1, which is obviously what we look for with a counter trend trade in a bear market. But there's a couple other things lining up here as well. Like, for instance, here's our low. Here's our next low, which is lower, obviously. Here's our next low after that, which is also lower, obviously. And then here, if we look at the TDMACD, we have a low, we have a higher low, we have a higher low again. So we have triple bullish divergence at support. At support. What does that mean? Is it going to explode to the upside? I mean, I don't know. It looks good, though. So here we don't have quite as clear. Here we have our bottom. Here we have a higher low. And then here from this low, we actually went slightly lower. So we don't see that same bullish divergence, the third drive of bullish divergence on the stochastics. We do see it on the TDMACD. Not as many people use the TDMACD as people use like traditional stochastics. So could happen. I'm paying attention to it. Let me put it that way. I'm not necessarily jumping on it right this second, but I've been talking about how this year could be, obviously going into the year was energy, but we talked about how this year could be the year of gold and silver miners and pot stocks. Clearly that has not played out, which is good because, we held off on our positions, obviously. But arguably, opportunity is beginning to present itself. When we look at these on longer time frames, though, I'm not going to lie. They look bad. Here we can see a little clearer why I like this support line right here. Obviously this was our bottom right there, our bottom right here. We talked about all this already. I don't think there's a better support around this level. Now, arguably there's, a pretty good one up here, but, obviously we would treat that as resistance. And there's lots of ways you could move that, to make it more or less favorable, depending on the time frame, etc. But I would say it's something along those lines. So that's what I'm looking out for. We'll have to see what happens in time. While we're here too, it's worth paying attention from the macro low right here all the way up to the macro high. That this is, man, I think my mouse is like wearing out or something. That this is basically the 618 of that macro move. So I'm going to pull this off here really quick. So from the low to the high, it's a 618 retracement of everything, which lines up pretty closely with the, shorter term 618 from right here. So there's a decent amount of confluence at this level. It's worth paying attention to. I'm not like jumping all over this like right away. Like I just got to get in this trade immediately. But there is some potential there. So it's worth paying attention to. So let's look at SILJ next too. So we talked about this one, obviously have been talking about this one for some time. It's not as, well, it's about the same, honestly. We see here the divergence is not as clear though. We have the low here, we have a higher low here, we have a third higher low here, here we have a low, then we have a lower low, then, oh, I guess technically it's either the same low or lower low. Okay, yeah, so we could call that 3 drives. That's viable, without too much of a stretch. And then a low, a higher low, and then a third higher low. So yeah, okay, so we actually have more divergence on the silver junior chart. So that's interesting. And then if we just switch over and take a look at a little bit broader of what's going on here. So, okay, we talked about this back when we were at the top of the range and everybody was super bullish right here and that breakout failure. And I told you we needed to see legitimate like monthly closes and then weekly on some of the juniors above those levels. And that was the absolute top. And look at how that played out. I mean, it's literally this giant red descending resistance. And then here on the bottom, again, depending on what time frame we are, we have support, support, support. It's not as clear on the weekly, but if we go to the monthly, it's pretty clear. We're basically at the 0.5 for the recent low and the all-time low. So they line up almost perfectly. 618 and the 382 are slightly lower. Oh, wait. I think I said the wrong thing. That was the high to low fib. And then this is the low to high fib. I didn't put a low from here to high from here fib. But you could see obviously the 382 and the 618 would just be reversed. It's like same levels basically. So that's what we're looking for accumulation on silver juniors, basically the bottom of the range. Now you have to be careful obviously of one of these like massive wicks right here. When we flip out to the monthly chart, we can see a little more clearly, you know, the wicks come outside of it. Obviously here we have the gap up and then sell down, gap up, sell down. So you guys know what we said right here when we were looking at this monthly, and it was starting to look pretty damn good, especially this candle had everybody really FOMOing in. I said, look, after this many fake outs, after this much bullshit on silver juniors specifically, I need to see a close, an open, and a close again above that level. And we never did it. We never did it. We closed here finally above it, and then we opened and we sold back into it. We never closed above it and then had an open and close above it after that. And that is like the ultimate confirmation from like conservative traders, investors, speculators, whatever. So from that point, we have literally just melted down straight to zero. Well, not all the way to zero, but 50%. So halfway to zero. We have a pretty clear support here at that level as well. So again, am I like not a buyer at $9, but I'm like hardcore, just like investor and just all in on silver if we go down to $8.16? No. I mean, but at this level, if we start looking at risk reward down here from where we're at right now, 15% blows through the 382, breaks down from the ascending or triangle rather, ascending support. So, 15% downside risk. And keep in mind, this chart goes back to 2012. After how many times we've seen it test the top and the bottom of the range pretty perfectly, 15% downside risk for the potential that, we're probably going to head back up to the top at some point in time is 61% upside. So it's like 4-to-1 risk reward ratio from where we're at right now. And that's assuming we jump the gun. If we take our time, if we take our sweet time on this, and let's just say it does come down to the 382 and we get the perfect buying opportunity and it moves up to the top, we're talking about 91% upside with a much tighter stop loss. So we're already in a pretty nice potential setup for a scalp from here. But, the opportunity is really getting juicy down around these levels. So this was basically our first setup. If we lose the 382, we got to get out. If we basically overshoot our target. And then the second setup would obviously be, that would be if like today you're just like, well, fuck it, I don't like to wait, so I'm just going to enter right here. And then the other option would be if you just wait until it gets down to like the 618 or 382, we'll just put it smack in the middle right there. And then obviously, if we sell off too aggressively below that, we want to get stopped out. And if we don't, we want to move to the top of the range. So again, it's like 7.6-to-1 risk reward ratio, 75% upside, 10% downside. The lower we get it, the better the deal. If we break down from the range and start closing below there, if we close, then we open, then we close again below there, obviously everything's invalidated and silver miners are going to zero, and probably silver is going to zero too. Something happened. They turned dog poop into silver with a fancy new spray. So we'll see. But I mean, there's a strong case to be made for silver and gold juniors. And now keep in mind, okay, I mention them occasionally. We look at them occasionally. But there's a difference between me looking at them and looking at like legit trade setups and like, cult members constantly being like, oh, these are amazing. Buy now because they're at highs. Oh, they're amazing because they're down some. Oh, they're amazing because they're breaking out. Oh, they're amazing because they're down so much. Like, you can't always be bullish because you lose all your credibility, in my opinion. All right, so a couple more assets and then we're going to wrap it up there. Just a few more to go. So hopefully everybody's doing good today. Sohil, what's up? Good. Brother, good to see you. Bonsoir, gentlemen. Toby Artok says, what's your own strategy? Bitcoin DCA long, hold, or solely trading? My DCA sits at 19K currently. Well, I mean, it depends, honestly. Like, if you're asking me, do I like to dollar cost average into a downtrend? The answer is no. So if we're in a bear market, the last thing I'm doing is buying the dip. So the second we flip from a bull market to a bear market, Toby, I flip from buying dips to selling rips. So if that's the case, if we're going to say, hey, as long as we're bullish, we buy dips. As long as we're bearish, we sell rips. Well, how do we determine if a market is bullish or bearish? Well, simple. Create an indicator for that. And if you're in the group, which has a one-time entry, contribution to support my work, you get access to this indicator, which is super fucking simple. When it's blue, it's in a bull market. When they're red or pink, we're in a bear market. So for instance, when we're in the bear market right here, like Bitcoin is currently, I'm not going to be buying dips, assuming that we just get back to new highs. Because if you bought the dip right here and you're like, oh, this is great, I just bought support at $14. And then you're like, oh, we just took another dip down to $11. So I bought that too. Oh, we just took another dip down to $9. I bought that too. Oh, we just took a dip down to $7.65, but I already ran out of money. And then you look at your like dollar cost average, and by the time you factor it out, your like average price is like $13. And now we're at $7 because you were buying into a downtrend. No, I don't do that. I sell pushes up, I sell resistance, and I buy support. So once we flip blue right here and we're in a bull market, now I buy support. So we come down here, don't get to support. Here I would buy support. This is where you buy dips. When the 821 crosses, but we're still above the 200s. And you look at it on any asset. I mean, it's like super obvious. If you're like, oh, what's the easiest strategy ever that you could literally like teach your kid and then they could just do it on their own without any help from you. And you're like, there's no such strategy exists, or else everybody's kid would be rich. Well, or people are just stupid as fuck. I mean, this looks like a pretty good strategy to me. If you were like, oh, you're going to miss out on a lot of trades if you use this strategy though, because you're not going to be able to trade every move up and every move down. Well, let's look at the Bitcoin chart. Okay. Here's Bitcoin on October 15th, 2015. And you're like, yeah, of course, if you go back there, it's going to look like you make gains. Well, when this strategy says we're bullish, we then proceed to go up 7,527%. So mediocre gains. Okay. And you're like, well, yeah, but you're never going to sell the top. Okay. So what about if we just sell when the strategy flips bullish or bearish rather? Okay. So we're up 3,000% gains, and we made one trade from our entry and then one trade on our exit. And then what about here? And you say, okay, so you're just going to like sit on the sidelines the whole time, or are you going to short? Well, that's up to you. You do whatever you want. But once the 200 exponential is 200 simple is bearish. Once the 200 exponential is bearish, you could argue you take this setup right here and you sell all your Bitcoin or whatever once they confirm bearish, or you short, whatever the deal is. Well, you just avoided 59% downside. And you're like, yeah, but you're never going to buy the bottom. Sure, okay. So we'll just wait until the strategy flips again. So here it flips from the 200 simple, flips. Here the 200 exponential flips. Here's where the price is at. And look, 24%. So we made 3,000% on the way up with one trade in, and then we exited. And then, we went net short or stay out of the position from that, and we avoid 24% downside. And then we just re-entered right here. And notice how when I draw this, I don't do what other people like, well, I don't want to insult anyone specifically, so we'll just make up a name. How about, Hey Bravo, okay? If my channel was called Hey Bravo, or that was like my name, I was going to be like, Phony Bravo or something. I would just say every time like, oh, okay. And then as soon as the strategy flips blue right here, we just buy. And you're like, okay, so I bought when it flipped blue. But that's not where the price is at. That's where the moving average is at. You didn't buy there, you bought here. Okay, so there's a big fucking difference between if you bought at 4,800 or you bought at 6,000. So you're basically just tricking people who don't know better. But anyway, that's a random tangent. So anyway, let's just say we did the same thing again and we bought right here, and then obviously, oh, flip red right here, bearish. That was basically a wash. We got out, up 15% or whatever. And then same thing here. Oh, okay. We dodged the COVID dump. So, I mean, I don't know what your diamond hands look like, but, if you got out before a 55% dump, would you be happy? Would you buy back in somewhere along the way? Or would you just buy back here with less risk, 10% different? But you see, once they flip blue, it's bullish. Once they flip red, well, it's slightly off the page right now, it's bearish. So here, there's chop. We had some crosses. We traded in here. This is a neutral area. You can take longs and shorts, etc. But here, once we confirm bearish, that was it. It was done. So if you look from when this flips red and it goes bearish, to when it flipped blue and it went bullish, and we look at where price action's at roughly, I mean, how hard is that? 419% gain, one entry, one exit. Pretty clear, I would say. So that's a strategy. The strategy is figure out exactly when you're going to say you're in a bull market and when you're going to say you're in a bear market. Code it into an indicator or into your brain so it's super simple, and you can just say when things are red, it's bad. When things are blue, it's good. And then, you know, figure out from there. But I mean, that's it. It's super simple, man. So yeah, I'm not going to be dollar costing into a downtrend, dollar cost averaging into a downtrend. It's just not cool. You buy into strength, you sell into weakness. I mean, because here's the problem is, if you dollar cost average into Bitcoin right now, and then it goes to 10K or 5K or 4K or whatever, you're fucked. You're going to miss the whole next bull run. But hopefully that helps. That's my strategy. But, you know, everybody has their own strategy. Big D says, I get what you mean about gold. Going into a bear market for, say, 20 to 25 years is nothing compared to its history of gold. However, 20 years are a lot for someone to wait for his investment to grow. Yeah, I totally agree with you, dude. And that's why gold is not an investment. That's you just literally proved my point for me, though. Gold is not an investment. Gold is a savings account. It's schmuck insurance in case the powers that be fuck up. Because look right here. Look at gold. Gold goes absolutely parabolic from 1970. That's weird. 1970, there was important stuff going on then, right? To 1980. 1970, 1980, what was going on then? You know, arguably to like mid 80s. Well, massive amounts of inflation, crazy instability in the government, society, economy, etc. That's when gold went parabolic. And then after that, you know, it melts down for literally, you know, decades. It goes sideways to down. I mean, silver put in its high, you know, in the 80s in 2011 and still hasn't put in a new high. So this isn't a speculation. You're not buying gold to like speculate on like you would a crypto or a stock or whatever. That's not what gold is for. Gold is to protect your purchasing power. I've been through this a bunch of times. Okay, if you look at gold on any long time frame, like decades or, you know, I mean, 100 years, 1,000 years, whatever. There's historical like relationships between gold and everything. We talked about this a million times. You know, if you wanted to buy a cow back in the day when gold was $30 versus if you want to buy a cow now and gold is $1,700, the ratio between how much gold you need to buy a cow is pretty much the same. Same thing with wheat, same thing with oil, same thing with, you know, ladies of the night or lady boys of the night, whatever you're into, or just straight up boys of the night. I don't know. The relationship is similar. And that's why like the gold silver ratio is so important. That's why like the Bitcoin to Ethereum ratio is so important. All these things. Because it gives you a historical value, like compared to other stuff, is this overvalued or undervalued? Because part of the problem with gold right now when you denominate it in dollars is, well, the dollar is really fucking strong. So if you denominate it in dollars, gold looks weak. If you denominate it in euros or Turkish lira, gold looks fucking amazing right now. So the idea of taking out the middleman, which in this case is the dollar, because the truth is, if you're buying gold to speculate or protect your purchasing power or as a savings account, eventually you want to take that gold and you want to turn it into something else. And the thing you want to turn it into isn't dollars. The dollars is the middleman between what you have and what you want. So the truth is, the relationship between gold and silver is much more important because maybe you're deciding, hey, do I want to own gold or do I want to own silver? So let's look at, are they historically over or undervalued compared to each other? The same way that you might look at gold and say, well, it's only $1,600 American right now, but I can buy, you know, 100 acres of land in Turkey for that. You know, as where previously I could only buy 10 acres of land in Turkey. So, you know, you're looking at essentially the dollar as the middleman. So if you can take out the dollar and look at it as what you want, the strength in the dollar is making the strength in gold not as evident. But if you take out the dollar, gold is actually still pretty fucking strong right now. So, you know, with potential risk ahead though. So we have to see. So GSG, which is, it's just GSCI indexed. But it's, you know, commodities and energy. Hanging on to 200 for now. Looking pretty weak right here. Likely, I mean, it's a tough one because you could argue a bunch of things are going on here. This was what I was looking at, this little ascending channel, and we technically broke down from it reclaimed it, broke down again. So I don't love how this looks right now. You guys know I have lower targets. I'm expecting downside targets, you know, depending on the levels, but probably somewhere closer to like 18 bucks. We'll see what happens though, because there's obviously like energy is kind of making up its mind as we speak as to what's to come. FCG, so this is our natural gas ETF. So these are the two scenarios we're looking at for nat gases. You know, we're either going to come up to the 786 and then, you know, basically reload and go to new highs, or we came up here, we topped out, we came down, you know, we bottomed out temporarily, and then we came back up to the 786 from the high to low, which we did perfectly, and looks like we topped out. We also perfectly back tested this ascending channel right here. So when I look at this, I say, wow, this is trading super fucking technically. We're basically inside this channel for the last couple years. We broke down from the channel, found support at the moving averages, back tested the bottom of the channel as resistance. It lined up perfectly with the 786, and now likely we're headed for another leg down, which is a correction from this entire 5 waves up, which obviously we almost made it to the 236. So the next target would be the 382. So between the 382 and then obviously we have our macro fib. If you like zoom way out, the macro fib is like slightly above it at like 1570. The 382 is at 14. So those are our targets, essentially between the macro 382 and the Rona dump 382. So that's what we're paying attention to. That's what we're looking for targets. And it's not crazy to think after this nice epic run up that we could have a retracement. Now, is it possible we just shoot up to new all-time highs and that's a wrap and we just keep ripping? It is. It is. I think a lot of the energy trade is already done short term though. So let's take a look at our uranium stuff. So I talked about it quite a bit lately. I even mentioned in the group that, you know, you guys know, obviously I took profits at the 786 because what I expected was from the high to the low, a back test up. We had already hit the 618 and got rejected. We came back down, double bottom, came all the way up. We hit the 786, took profits, started to run a little bit after that, sort of back testing that ascending support line. I'm not gonna lie, I told you guys, or it was in the group, you know, this little move up here had me feeling like a FOMO-sexual. You know, I was looking back at it like, damn, I might have sold too soon. But stuck to my guns, because when we looked at the rest of the uranium space, the majority of them were telling a different story. But Cameco, because, you know, obviously, you know, it's a big player. It's an actual company too. You know, not just like the underlying like spot. This was looking more bullish than the other players in the space were. And then obviously we got that pretty aggressive sell-off and then this gap down here. Now I'm feeling, you know, obviously much better about my decision, which I was confident most of the time, right up until it looked like it was about to run again. And I was like, well, and that's fine, because I was fully prepared to admit that I was wrong once we broke to a new high, closed above the new cycle high, consolidated, and, you know, saw some kind of like reset on the indicator oscillators where I already had conceded, okay, look, if I'm wrong, you know, I'll buy back in at those levels. But obviously we got lucky. So URA is next. Now this is part of the reason why I didn't trust Cameco, because this is URA right here. We're clearly trading in a range. You know, we have a blue support down here at the bottom. We have a red resistance here. We said one top, two tops, and then didn't even quite, that was our target to the upside. Didn't even quite make it there, but we're below the 200 exponential and simple now, rolling over. Looks very clearly like we're actually getting ready to go into a bear market. Again, we have lower targets. I'm super fucking bullish on uranium. Sometimes people hear me talk about it and they're like, oh, you're flipping. You said uranium was the best and now you sold it. Yeah, fuck you. Unsubscribed. Okay, calm down. Here's our 5 waves up, for instance, on URA. This is our ABC potential correction. And then that's the 1. This is our 2. And then, you know, where's my actual targets for uranium? Don't get too excited, because it's, I mean, we're talking about like 55 bucks for URA. And we're at like 21 now. So, you know, and that's just for the 3. And that's a, you know, modest target. So there's definitely like lots and lots of potential. But, I mean, let's be real. You know, if you didn't sell up here at the top of the range and then we come down to target, you're talking about like 32, 33%. You know, if you did like me, and actually I didn't take a scalp on URA, I took it on other positions, you know, it's 30% up. So if we went 30% up, we don't take profits, and then we go to a new low, You just gave away 30% for nothing just because you're holding. I just don't play that game. I mean, I do with positions, but I'm not trading in and out of investment positions the same way I am like my actual trading account. I'm using longer term trend to determine that. Like the majority of my stock positions, I exited when we confirmed into a bear market, you know, on like longer time frames. I'm not trading like 4-hour charts for like my investments for like 30 years in the future, etc. So UUU, again, very clear, like descending channel. We're at the top of the channel. We're looking like we're trying to, flip bullish. My target down here is the 382 still. $4, $4.06 for that. UROY was one of the scalps we took. We took a scalp on the way up right here. We took a second scalp after the retest right here. Rode it almost to the target. I took profits early because I thought this was just going to, I thought it was going to blow up. And I'm like, I'm not giving this back. So it did. It sold off. It came all the way back up and put in a new higher high. Again, had me feeling a little bit of FOMO, but that's okay. You can feel FOMO. You just have to recognize when you're feeling FOMO and then understand like, okay, I'm still going to act rationally even though I got some butterflies in my tummy. That's okay. So descending channel, we're operating inside of, obviously coming back down to that level. If we assume we're just going to stay inside this channel and just complete melting down, you know, we'll look for another buying opportunity, ideally around the 0.5 right here. We don't need this one anymore. From the low to the high, we come back. We already hit the 382. The next target will be the 0.5. So I'm looking to load back up on UROY at $1.84. You know, call it $2, maybe a little lower. This is a very, very important support right here. If and when we break down from the support, it's going to be very clear, though, that, you know, we broke down. We're not in some raging bull market. So the 0.5, all of a sudden, you know, looks okay, but probably we come to the 618, which is $1.39. So if we get it for $1.39, that's like 50% off. That's a deal. And pot stocks going into full-on meltdown. So CGC has been holding up decent. You guys know, again, took profits on the CGC position, sold it right here. Again, did not play out the full trade setup, but was not ready to like give this back. So, you know, but I tell you guys in real time, obviously, what I'm doing. Try to all the time. So we broke down from here, 821 bear cross again, likely headed back down to the lows, likely headed to new lows. Tilray was just a complete fucking bust. This one ended up being just a flat, just basically out of this thing flat. It's at the lows. I'm still waiting and have been for a long time. You guys know my main goal is for Tilray to go to new all-time low, at which point in time I'll be interested, like actually really interested in Tilray. Not like the second we put in a new all-time low, but it's one of the few pot stocks that has not gone to a new all-time low. And I just think that that would really cement in that there's quote-unquote no more sellers. Because if there's still people in profit on Tilray, then there's still people left to sell, in my opinion. ACB, so we talked about this key support line, really needed to hold on the daily. It had a couple pokes out the bottom, so it's not the end of the world yet. But if we start to lose this little bit of momentum we have, it's going to look bad. And the truth is, I mean, it looks like it's ready to take another leg down. So, again, still watching the pot stocks. Still think there's some serious potential there. But there's a reason that every time we see when these pops up, we cash out our position, or at least like the majority of our position. And then whatever we don't cash out, if we're just assuming that whatever profits we have, you know, let's say we, like let's say a 50% upside trade. So you have $100, it goes up 50%. Now you have $150. The absolute minimum, the absolute fucking minimum we should be taking out of that trade every single time is our $100 back. Now, me personally, I like to take my $100 back, and then I like to take like, you know, 25 profit, and then I'll leave like 25 profit in there. So it's the market's money anyway. But I mean, what ends up happening in those scenarios is you either regret it or you look like a goddamn genius. So for instance, and I talked about this, you know, people never like to admit when they're down on positions or when they take a loss or talk about anything other than just like winning. We talked about these scenarios here. God, I can't even remember where it was from. I mean, obviously we were super bullish back here, took advantage of this and sold. The majority of our position on Tilray was up at like $40, right around $40. But now, granted, you know, that run up was massive. So we got like really bullish right here. We basically had what, a 4x run up, 431% run up. So I close out. So again, say we have $100. it goes up 431%. You know, you now have like $500 roughly. So you'd be a moron not to take out your original $100 for sure, and then obviously lock in some profits as well. So we end up locking in the majority of the profits. But I kept open a tiny little position, or kept a little bit of my gains like from that. And it's not specific now because obviously we've scalped a couple times since then, so it like dilutes the actual numbers. But it was something insane. Like from that position to where we're at now, we're down 91%. So let's say I took out my $100 and I left the other $300 in profits in there, or whatever I said. You know, you would now have, instead of $300 in profits, you would have $30 in profits. So there's an argument to be made that you should be taking out more than at least your initial investment, especially when we're in a downtrend. Now you could say here, well, we were technically in a bull trend right here. Well, then once we get to where we're confirming into a downtrend with a 200 exponential and simple bull flip bearish, you could legitimately, or should legitimately think like, hey, I should probably exit that position. Or, and this is okay too, or 100% fully know in your head that, look, we're in a downtrend and we're probably going to go way lower. I have no intention of selling this because it's the market's money. I'm never going to look back at it and say, oh, I should have just sold it if it goes to zero. I'm never going to look back at it and say, oh, I should have sold half of it, whatever. You're just fully saying, I'm comfortable with that, whatever. Because I'm not going to lie, when I look back now from the entry, let's just say like roughly around this area right here, because we added to our position once we broke above the 200 exponential and they both flipped blue. From that entry to right now, those positions are down 70%. So any money I didn't lock in right here, not only did it go up a few 100% on top of that, but just from where I put my own money in, it's down 70% from there. So it's very, 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 very important that if you're going to trade in and out of something that's clearly in a bear market, that you take out your gains, most of your gains, not only just your initial investment or trading money, but a lot of your gains too. At least 50%, arguably 75, you know, maybe 90. It depends. But I mean, when I look at those positions and everything, I say, well, thank God I sold a bunch of it. Thank God I was like massively in profit on this, or else my whole entire position would have went from, you know, and that's the most devastating thing, is when you don't take profits on a winner. At one point in time, now granted, this was for a second, it was up 500%. When we took profits, it was up 300% from that last entry. And then if you look at, if you didn't take profits and you rolled it down, you rode it all the way up 500% and then all the way down 70% from your entry. So you went from net 500% up to net down 70%. I mean, that is disgusting. And then for you to, if you rode that down 70%, for you to get back even to that point right there, to that peak, you have to go up 1900%, 1943%. I mean, it's like a 20x. You have to 20x to get back to that level you're at right now. Just to get back to your entry now, we're down so much, you have to 236%. I mean, that's terrible. That's like, that's absolutely horrible. That's almost a, you know, it's like a 3x basically. So you know, I understand the idea of like hodling or investing or, you know, buying good companies or following fundamentals or whatever. But there's a strong case to be made that if you just make one trade in and out every like 6 months to a year on some of your positions, you'll save yourself a lot of pain or lock in a lot of profits that you would have otherwise left on the table. And that for me is what makes trading so obvious. And then last but not least, sundial, again, just melting down here, still at a higher low for now, hanging on to this macro 618. What the fuck? Oh, you know what? Yeah, this doesn't actually work anymore. We need to fix all this. Damn. I don't think I redrew this one on this account since the split. No biggie. I mean, I don't think anybody really cares about sundial anyway, but definitely not me. I really do think one day the pot stocks are going to have their day again. But, you know, in the strongest bull market ever, I mean, they're just getting absolutely wrecked. it's just not the time to be a pot stock believer. Now, if you look at these prices and say 5 years out from now, are they all going to be massively in profit? I mean, I think yes. Or they're either going to be zero, acquired by someone else, or massively in profit. But we have broken through the 786, came down essentially to the 886. So is it possible we're going to new lows on Sundial? Yeah, it is. It really is. It's been getting absolutely crushed. So this is going to be like another Tilray. When it hits new lows, it's going to look super, super juicy. You know, and that's just a mentality thing. Like once everybody's a loser, you know, the likelihood of there being like big selling coming in after that is very, very unlikely, because most people will have already probably sold at a massive loss, or, you know, at least around there. Speaking of massive losses, crypto looks like trash. All right, we made it to the end, guys. Friday at 1 p.m. Let's jump in and look at the stocks real quick. Oh, yeah, look at that. Super bullish. So we just gapped down, tried to push back up and close the gap. Couldn't even do it. Got all but rejected. 2 hours and 35 minutes left. I wouldn't write it off just yet, but the Dow does not look good right here. SPY looks even worse. Yeah, I mean, the truth is with today, basically, what it comes down to, and we talk about this all the time. Look at that, Russell at the lows looking juicy. The truth is, if we close at the lows, it looks really bad. You know, and it's like I say it all the time. If we close at the lows at the end of a trading session, at the end of the week, at the end of the month, at the end of the whatever, if we close at the lows, it means we didn't run out of sellers. We ran out of time. So you would think that, okay, if everybody is selling still, and then the day ends or the week ends or whatever, once the markets open back up, you would assume there's people still in line ready to sell. So if we close at the lows, we see continuation into next week, in my opinion, which seems very, very likely. If we rally off the lows and we leave behind, you know, some kind of rejection wick of lower prices, there's a much better chance that we see strength into next week or strength into the weekend for crypto. So that's really what I'm looking for. That's basically going to be the tail end of, you know, when I'm looking for like some kind of like crypto move over the weekend or whatever. FEDEX trying to rally off those lows. You can't even see that little guy. He's just hanging out in the middle of nowhere. It's only down 21.8% today, so that's good. So it's bouncing back. It's back up. It's still down a little bit for the day, but the candle's green. All right, so Big D says, oh, we already said that one. Neuroman says Reds candles for this week. Reds candles for this week. I mean, it looks like it. Like in hindsight, or you mean the week coming up? The week that's ending? Yes, I would say red candles across the board. Unless you're one of the two big dick daddies, right? I mean, if you were going to invest in anything on planet Earth or speculate on anything on planet Earth, I mean, what are they? I mean, arguably probably nat gas, but you know, TNX, aka rates going up, looks pretty bullish to me. And DXY, the old dollar bills, yo, in relation to other currencies, looks pretty strong to me. And we know for a fact that as long as the TNX and DXY have been strong for the last like year plus, it's been very, very hard for equities to rally, or at least this year. So in my opinion, as long as the TNX and DXY are still like, I mean, they're literally at the highs right now, looking super strong. I mean, like, you could argue, oh, well, look, though, this is so weak right now. Oh, it's getting absolutely crushed. Look at them. They're terrible. You know, the same way we talk about when something is at the lows, like, for instance, you know, TNX is at the highs, hanging out, and you're like, yeah, but it shows weakness. Oh, look at all these. Okay, sure. So we're at the highs. Is it more likely from here we go to new highs, or we break back down and double top? I would say more likely we go to new highs. The same way, if we think about it from the opposite perspective, and people get biased in one direction or the other. It's very difficult for them to just look at things unbiased. The best thing to do is put a bunch of tickers up on your thing, mix up all the windows, and then don't look at what the ticker says, and just look at the actual chart and say, is this bearish or bullish? Because then you'll be like, well, I like Microsoft, and Microsoft's a good investment. I've made a lot of money on it in the past, so it probably bounces here. It'll find support. I mean, you're like clouding your actual technical analysis with like fundamentals and like feelings. That's not cool. I mean, so if we look at this Microsoft chart right now, which is literally the opposite, it's the exact opposite of the TNX chart. Okay, we're in a bull market, then we rolled over into a bear market, and now we're melting down, threatening the lows. So that's literally, a bear market threatening the lows. I would say there's a very high probability that we go lower from here. But for whatever reason, when we look at this chart, which was in a bear market for a super long time, and then converted into a bull market, and then look, we threatened the 200 exponential and simple moving average. So this is the exact chart of Microsoft. And then what happens after that? Well, we backtest the lows, in this case, the highs. So this is where we're at in Microsoft. We're backtesting the lows right now. So what happens after that? Well, it takes a little bit. We consolidate, and then we break through those highs, or in Microsoft case, the lows. Microsoft goes to new lows. TNX goes to new highs. So why now, when we're doing the exact same thing again, we're backtesting support right here. We front ran the 200 exponential and simple. Why didn't we come down to support right here? People were so excited to buy this asset, to participate in future upside potential, that they couldn't even wait. They were fucking chomping at the bit, standing in line to get this motherfucker on sale. They were waiting outside the Apple store to buy the new iPhone all night in a tent with a garbage barrel fire making s'mores. Okay, that's how excited they were to buy the fucking treasury yields. So, metaphorically speaking. So what does that tell you? It tells you the buyers came in so fast. They wouldn't even wait till it got to 200 exponential. And they definitely wouldn't wait till they got to 200 simple. And then they ran the price all the way back up to the highs again. And now here we are testing the highs. And now people are bearish? I mean, were those the same people that were bearish right here when we were finding support and testing the highs? Are they the same people that were, bullish on Microsoft at the low? I mean, it just doesn't make sense to me. The charts do the same thing over and over again until they don't. When we're under the slope lines and they're red, it's bearish. When we're above them and it's blue, it's bullish. It's that simple. So of all the times to be bearish on an asset or asset class, we're going to get bearish while it's threatening the highs in a very, very powerful uptrend with all the momentum in its favor, when everything else is getting wrecked. And this is just crushing all the markets. And we're going to say, oh, well, look how far we are off of the highs. Oh, look at these 3 red candles in a row. That's a double top. That's a rejection. Or is it just this right here? And we're just revving back up before we just move to way new highs after that. I mean, that's the simplest way to look at it for me. I just don't look at the ticker and just look at the chart and say, okay. Or you know what else helps? I do this sometimes just to like fully get my point across. Just do that. Turn off the fucking candles. Turn off the candles and just look at the indicator. Okay? If there's a bunch of blue, it's bullish. If there's a bunch of green, it's bullish on shorter time frames above the blue. If there's a bunch of red, it's bearish. If there's a bunch of red below the bearish slope lines, it's bearish. So here we want to sell the rips. So every time it turns green, we want to be selling into them because it's probably going to peak out. So selling into this, selling into this, selling into this, definitely selling into the back test of this before we take another leg down. Selling into this. And then finally, we would technically be a seller right here. And then what happens? It starts to change. Well, now we have a low, then we have a high, then we have a higher low. Then we start to see more green than we've seen for a while. Then we penetrate the 200 simple. Then we penetrate the 200 exponential. Then the 200 exponential and simple shift blue. So that's it. That's our line in the sand right here. So the same way, this is our line in the sand. Okay, no matter what, the market is telling us right here, we are in a bear market right fucking here. No denying it. It's a fact based on this strategy. The same way that it tells us right here, we are in a bull market. So here, I'm selling rips. Here, I'm buying dips. So, and you're like, well, I don't want to sell rips. Okay, here I exit my whole entire position. I just sit on the sidelines. Here, I re-enter my whole entire position and I'm back in the market. Now, I never all in or all out. I always use, entries based on various things. And that's where like the more complex portion of the strategy comes from. But for the super most basic part of this strategy, if we look at this strategy and I say, okay, if you're just going to use these lines right here and you either pick to be long or short, Are you just going to right now just arbitrarily look at this chart and say, okay, well, we're seeing some weakness here at the highs, so that's it. That's the bear market. I called it. I'm saying that's the top, and I'm no one that matters at all. But that's what I say. Okay, so how likely is that going to actually be the top? 0.00% probably, with a little 1 way afterwards. Or you could just wait until these turn red, and then maybe it's over here, maybe it's over here, maybe it's like 10 years into the future. I don't know. That's how I look at it. I keep it simple though. But I mean, what do I know though? I never buy the tops, and I never sell the bottoms. So as I'm like in the worst crypto trade ever, about to sell the bottom, you're like, but it's not worst crypto trade ever. I mean, stop it. You're down like 3%, you crybaby little bitch. That's how you know you're too used to winning, when you're down 3% and you're salty. All right, I'm about to wrap it up there. Hopefully you guys enjoyed the stream today. Everybody, happy Friday. Hope you all had a good week. Obviously, saw some nice gains in a couple of our recent moves. Locking them in is obviously always crucial. You guys know, obviously, none of this is financial advice. What's up, Yoda? Good to see you. Angel, good to see you as well. Milligan said, thanks for the great stream. Enjoy your weekend. Going to be an exciting week. Yes, I completely agree, sir. Yoda says, everybody, hello. Upon us, weekend is the likes smash. And Big D says, thanks for everything, dude. Have a great weekend. Yeah, everybody have a great weekend. Appreciate everybody tuning in today. Hopefully you guys enjoyed the stream, made some kind of points, taught you something, learned something, reinforced something you already believed, entertained you, whatever the hell you're here for. Hopefully it worked. So that's it for today. It is Friday, 1:34 p.m. Eastern Standard Time on September 16th, 2022. And that is it for today. Crypto Trend Trader, just reminding you, like always, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. So please do your own research and trade responsibly. But you guys know, obviously, as far as a crypto trade is concerned, if we close this 4 hour, like right now, or anywhere around this region, I'm going to take the small L and exit. But yeah, I am looking for that 4 hour close. So, but that is it for today. Obviously, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Crypto Trend Trader, and I'm out of here.